So confirm that you can hear me, please.
Yes, you can hear you, sir.
Okay, that makes sense. That makes a lot of sense. And then moment from now, you see my screen. So please also confirm. Okay. So any moment from now, just confirm that you can see my screen when it comes up. It's not a hop, I know.
Mommy, mommy, mommy,
Yes, okay. All right. Sorry, just a minute.
No, you can buy one. But the thing is to get it for that price, that is the thing. Like everybody is thinking, actually, like, if everybody like, but the reason why I always put the MOP thing is because if at the end of the day, the MOP is not up to date, then the price will change. There be probably at the end of the day, your price will go up at around 40 minutes. Then if I take again, the price might be 1,500 or 2,000 instead of down 1,000.
I'm coming. Is it up now?
Yes, sir.
Banco.
You treat it.
Okay. So, do you have any question from the previous class? Or move on? Yeah. Any question from the previous class? If you have any question, just drop it in the Q&A box so that I don't flout the rules we set. Just drop it. You have to do that. Any question from the previous class? The class we study or we build coming in contact and we have to solve work. And this morning continue from there. This morning I will continue from there also. So do you have any question? Comfort, are there questions? Comfort, are there questions? Question.
No question yet, sir. No question, sir.
So I can then. Okay.
Yes, there's a question from somebody.
Yeah, please go ahead.
Ahmed, he said, regard donation, does it mean that for every CTI question, donation is restricted to 10%, or is just for companies that made loss in the year of assessment?
To if your companies, in your question, if you have accessible profit, you have just net profit, beg your pardon. Net profit is significantly higher than the donation, and you can even you know that at the end of the day, our adjusted profit is usually higher than your net profit. So if your donation in the question is already higher than the net profit, so in that case, you can just go on and then don't even do the adjustment again. You don't need to waste that your time in achieving that. Does it make sense? Do you understand what I'm saying? So in that case, hello, I'm in class. Do you get that? So it's a function of your net profit. On all occasion, your net profit will always be lower than the adjusted profit, right? So if you're if you're this thing, what's the name now? If your donation that you have is already higher than 10% of the net profit, definitely to be higher than 10% of accessible profit. So you can as well just move on and you don't need to do the computation, because don't forget that it is the lower of the 10% and the adjusted profit that is going to be selected at the end of the day. I hope I've answered the first question. No, legal fee for signing contract is allowable, but it's dependent on what makes up the legal fee, right? So, but I think for the question, I don't know the question offhand, but I think it has to do with land acquisition. That's what it is. But then IAS 16 comes into play. The cost of an asset is all cost incurred to bring the asset to intended use. So the cost of the land itself, the cost of signing the land contract is also part of the cost of the land. So it's capital in nature. And that's what formed the basis of disallowing it. Yeah. Yeah. Comfort, is that all?
Another question here.
Yeah.
What is the percentage? What percentage is the relief capital allowance?
What percentage is the relieved capital allowance? I didn't get that question. But if you're asking about restriction of capital allowance, capital allowance is typically restricted to 2/3 of accessible profit every time, right? Apart from companies that are in manufacturing and agro-allied industry. So companies operating in those two, under those two industries will not be restricted. But other than that, it will always be restricted to 2/3 of accessible profit. So if that's what you're asking, that is the answer. 2/3 of 66 to over 3% and all of that.
Okay. Another one. Good morning, sir. Which QCE do we charge initial capital allowance? Initial allowance
So
on.
initial allowance is usually on asset that you buy newly. So it is in the first year the asset is put to use. So any asset that is bought newly, you input your initial allowance on it. Yeah. Next
That's all.
one.
That's all for now.
Okay. Okay, good. So let's move on then.
Yes, I think there's one. The person said, is renewal of lease allowable or non-allowable?
So depending on the lease structure, so if it is a short lease, it is allowed. If it is a long lease, it is disallowed. I come again. Short lease allowed, long lease disallowed. So that's the point there. All right. So let's go
The
ahead.
initial allowance was not computed for the old QCE. Why?
Eh, again, I said it is in the first year the asset is put to use. So meaning it's only on new assets. That's the implication of that sentence. So you don't compute on old assets, because in the first year the asset is put to use. I hope I've answered you.
Mommy.
Hmm? So let's go ahead. All right. So let's go on. Let's go on. Clement and Comfort, I believe I've answered everybody. So we can then move on.
I think that person that asked about the capital qualifying capital expenditure, he said he made a mistake. He was supposed to ask which capital expenditure do they charge investment allowance on.
So okay, plant and equipment. Only plant and equipment. Again, it does investment allowance should not be deducted from the cost at the end of the day, but it's typically only on plant and equipment. All right, so let's quickly play with this question. Question 1. That's May 2024. Is this what I want to solve? Not sure. But I'll still come back to that. Let me be sure I'm picking the right question. Hold on a minute. Okay, so let's just move into Pioneer, because Pioneer will definitely treat things around common income tax too. So that way we are using one stone to kill two birds. So let's quickly move on to Pioneer status incentives so that we don't waste much time. But you know, Pioneer status incentive is even typically what the examiner is likely going to do, because it tests your knowledge of common income tax, versus period, capital allowance, loss relief. So it's better to, but and anything that I'm picking here as allowable and disallowable expenses still applies regarding the common income tax. So you have to pay attention. But why is Pioneer status incentive different? Or why do we say it is different from common income tax? So the only difference is that Pioneer status incentive is granted Are you with me? So it is granted to taxpayer who participates in a particular line of business, right? It's granted to taxpayers who participate in a particular line of business. So in that case, they have tax holiday. They have tax holiday for first 3 years and renewable for 2 years. That's the first thing we have to note, right? Number 2 is that dividend paid during this period to shareholders, yeah, provided it is made out of profit, is not taxable, so there will be no withholding tax on it. Does it make sense? So in that case, if the dividend is paid out of profit, there will be no withholding tax. There will be no withholding tax on dividend, right? The third thing we want to say, please, are you with me? Are you with me? Please thumbs up if you are with me, please. Okay, good. All right. So that's the second thing you want to note. So provided the profit is paid, provided it is paid out of profit, it is it does not attract withholding tax. Number 3 now is the day the license is granted, the day the license, that's the pioneer certificate, is granted, or let me call it the way it is. The day the pioneer certificate is granted, the day the pioneer certificate is granted, is called the production day. It's called the production day. It's called the production day. That's the next thing you want to note, right? It's called the production day. So now the business, technically, the business is deemed to commence operation in the post-pioneer period. The post-pioneer period. In that case, commencement rule applies. In the post-pioneer period. All right. Assets purchased during the pioneer period. During the pioneer period. Assets purchased during the pioneer period are deemed to be purchased in the post-pioneer period. Are deemed to be purchased in the post-pioneer period. Are deemed to be purchased in the post-pioneer period. Right. So those are the major points we need to note. Every other thing, I will introduce you to them as the class go on. So let's quickly solve 1 or 2 questions. Don't forget that at your level, what you are typically going to be doing for anybody is to be advising, right? So now, right, let's note this also, that accumulated profit. Accumulated profits made during the pioneer period will be ignored in the post-pioneer period. Accumulated profit made in the pioneer period will be ignored in the post-pioneer period. That's one thing. Losses made or loss made. Loss made in pioneer period will be carried forward to the post-pioneer period. To the post-pioneer. All right. That is basically the cardinal point, or what differentiates the pioneer status incentive from common income tax. At the end of the day, if you look at it very well, and if you pass your mind back to minimum tax, technically, pioneer companies during, the first 4 years of the pioneer period will be exempted from minimum tax, right? Because technically, since we say commencement rule applies, and minimum tax is saying that in the first 4 years of commencement, you don't minimum tax. So technically, it means minimum tax will definitely not apply to this guy. Do you get that point? Yeah. If you get it, please do thumbs up for me. All right. Good. Good. All right. That said, now let's quickly check. So Clement or Comfort, either of the two, you may want to read this page so we can start sitting in trouble. Let's go ahead. So you start from requirements so that we'll be able to move on.
Go. Go. Mm, mm,
Comfort, are you there? Or Clement?
Yes, sir. Yes, sir.
Please read. Please read the question. Can you see my screen?
Can I go ahead?
Yes, please.
Okay. As the company newly appointed tax consultant, you are required to prepare a report to the managing director stating the A. Adjusted profit for the relevant period. B. Tax liabilities payable for the relevant assessment year. C. Provision of the Industrial Development Income Tax Relief Act 2007 as amended in respect of a pioneer company. I. Dividend payment. 2. Losses made during the pioneer period. 3. Capital allowances. Capital allowances for qualifying capital expenditure acquired during the pioneer period.
Are you still
That is,
speaking from my end?
I'm done with the requirements.
Okay, let me. All right.
Okay. Paper World Nigeria Limited, Ibadan, a manufacturer of pulp, paper and paperboard, was granted a pioneer certificate by the federal government on May 1st, 2017, for an initial period of 3 years as a result of unfavorable business climate, which resulted in poor financial performance and several interference by officials of the Ministry of Industry, particularly on issues relating to dividend policy, treatment of losses, and capital allowances. The company did not apply for an extension to the pioneer status. The company had the following statement for the first 3 years of operation. Yeah, they have net loss after charging salaries and wages, transport and traveling, depreciation, rent and rates, donation to social clubs, allowances for doubtful debt, specific general expenses. Then the following qualifying capital expenditure item acquired during the pioneer period was certified by the Federal Inland Revenue Service as at the end of the pioneer period. We have non-industrial building, industrial building, manufacturing industrial plants, furniture and fitting, then motor vehicle. Then additional qualifying capital expenditure acquired. So please scroll.
I'll take it.
Yeah, I think he lost connection, so let's just wait for him.
Hello, please, can you hear me?
Yes, sir.
Sorry about that. I wasn't, I think. Minute. So let's go ahead. Clement or Comfort, please read the question. You want to start very fast. Because I didn't get most of this right.
Papa, please, we can't see your screen.
Clement, can you find
We're not sharing your screen, sir.
my screen now? I'm sharing my screen. Please, can
Then
you go to
your voice is breaking.
can you put the chat room there? Hello, can you hear me now? I think it should be better now. You can hear me, Abby?
Yes.
Okay. Now let me share my screen now. Let's see if it's going to be pairing. Can you see my screen now? Just a minute, anytime it comes up, so that we can work from there. Yeah. Okay. Please tell me once it comes up. Can you see my screen now?
No, sir.
Hello. I'm just trying to make sure I use alternative networks. Sorry. Can you hear me? But this thing was good. Started now. Phone. Can you hear me?
Yes, sir.
Okay. So is my screen coming up?
Not yet, sir.
Okay. First time once is up.
Yes, sir, it's up.
Okay. All right. It's up now, Abby. So
Yes, sir. Yes, sir, it's up.
okay, good. So let's guide. Please read the question so that we can move on from there. Please read the question. Clement or Comfort?
Sir, please.
This November 20.
Should I start again? Should I start again?
Yes,
Oh,
start
pass.
again. Start again.
Okay. Paper World Nigeria Limited, Ibadan, a manufacturer of paper and paperboard, was granted a permanent certificate federal government on May 1st, 2017, for an initial period of 3 years. As a result of unfavorable business climate, which resulted in poor financial performance and several. So please, I can't see the. Okay. And several interference by officials of Ministry of Industry, particularly on issues relating to dividend dividend policy, treatment of losses, and capital allowances. The company did not apply for an extension to the pioneer status. The company had the following statement
So
for the
let's
first 3
hold on.
years
Let's
of
pick up.
operation.
Hold on. So let's pick up the question as it is now. So now the company did not apply for extension to the pioneer period. So if I were you in the exam, what I would do is this. I will start making some notes based on that information. The first one is when did the pioneer period begin? That's the first thing I want to ask. When did the pioneer period begin? That's when he has the production day. When did it begin? So we said 1 May 2017. Is that correct? Hello.
Yes, sir.
Okay. So in that case, they didn't grant him extension. So the pioneer period is supposed to be for 3 years, right? So it means that the pioneer period ended when? So you are doing 3 months from that time, right? 3 years from that time, beg your pardon. So if that case, what is that's 31 4. So 7, 18, 19, 20. So it ended in 2020 April. Did you get able to my information from there? Right. So now go ahead.
Please scroll.
So tell us what figures are assumed correct. Abi,
Yeah, please scroll.
where do you want me to
Okay.
scroll to? The following additional information, Abi.
Yes. The following, okay, the following additional information in respect of the operational result was provided. Dividend income was from equity shares acquired from Nigeria listed company. Repairs and maintenance was made up of repairs of manufacturing industrial plants, maintenance of motor vehicles, improvement to non-industrial building, then general and administrative expenses comprised transport and traveling, advertisement, transfer to revenue reserve. Then legal fees consisted of collection of trade debts, fine for late filing and payment of tax, legal expenses on new issues of shares. Please scroll. Allowances for doubtful debts include bad debts written off, specific provisions, general provision, and bad debts recovered. Required. As the company newly appointed tax consultant, you are required to prepare a report to the managing director stating A.
You don't need to read
Assessment
that.
report.
You don't need to read that. We read it before.
Okay, sir.
Yeah. So now, hope you are able to know how I'm able to deduct that information. So, given what I said before, commencement rule will start from when? Commencement rule begins when? 1st of May, because the day after the penal period ended is the day the commencement rule will apply, right? Is the day the commencement rule will apply, right? So in that case, are you with me? So in that case, what you now have afterward will be that after the commencement rule has begun, so you apply you apply the rule for commencement, right? So the next thing I want to do is now to determine the basis period. Are you with me? Determination of basis period for the years of assessment. Now, you know, commencement rule will typically cover 3 years, right? Commencement rule will cover for 3 years, but then you always, so that you don't have to waste your time, because obviously after final period, commencement rule is what you apply next. So to make sure that you don't waste much of your time, you have to do that in alliance with what you have in the what's the name now, in the question, the period you are given in the question. So if the period is not extending in the question to 3 years, you don't have to do for 3 years. You don't have to do for 3 years is my point. So you do basis period for accessible profit, basis period for capital allowance, so that you can also determine that alongside. And then you now do allocation of QC, so that you'll be able to trace your capital allowance to the year in which you bought them. Right. So if that's the case, so let's start from here. Our rule says that your basis period should be from the date of commencement, because beginning from 2020, you apply Finance Act 2019. Is that correct? So you start from the date of commencement. So what's the date of commencement? The date of commencement technically is 1/5/2020, right? Then you do it to the first accounting year end. So to get the first accounting year end, you will check what is the accounting year they typically would apply in this question. I'm seeing that the accounting year end, please confirm that you can still hear me and I are
We can,
following.
we
All
can
right.
hear you, sir.
You know, I'm living in a place where I have to say, can you hear me? So that I'll be sure I'm not logged out again. Just bear with me. That's the implication of those living, or a reminder that I'm still in Nigeria. So now, that said, you want to check what is the accounting year end. And for some people, the examiner will not give you the accounting year end, while for some, the examiner will state explicitly that there is an accounting year end. For this guy, I'm not sure he told me that specifically there is an accounting year end, but I noticed that he's been preparing account up to April, right? So since he's preparing account up to April, it therefore implies that the accounting year end is April every year. So the first accounting year end here will be 31st April 2021, because the rule says from the date of commencement to the first accounting year end, and it's going to be on preceding year basis. So the year after 2021 is what? 2022 year of assessment, right? I hope this is clear. And I will check again to be sure. Do I need to do it for the 3 years? Don't forget you don't have time. And you know, I mentioned the thing about time in the last class. So you just have to make sure you maximize your time very well. So now this one, you will check. Do I have results for 2022? I don't have results. So I don't need to do for the second year because I don't have that result. And basis spread for capital allowance is not different from basis spread for accessible profit, only that there should be no gap or overlapping in the basis period. Only that there should be no gap or overlapping in the basis period. So you have 1/5/2020 because it's 1 year and there's no gap overlapping. You can as well repeat what you have for accessible profit as that of capital allowance. All right. So if it is clear to this extent, we can then go ahead and allocate the QC. So we said that asset purchase, that's the first thing that you need to note at this point. Asset purchased before the date, asset purchased before the date of commencement are deemed to be purchased on the day of commencement. Asset purchased before the date of commencement are deemed to be purchased on the day of commencement. So in that case, what are the assets that we have? So they said that the following QC acquired during the pioneer period were certified by FRS as at the end of the pioneer period. So it means, therefore, that all these assets were purchased during the pioneer period. All these assets were purchased during the pioneer period. So if that's the case, so it means that they were purchased in the post-pioneer period by implication, irrespective of when it was purchased. So we have NIB, we have industry, yeah. Industrial building. Then you have manufacturing industrial plant, right? Then you have furniture and fittings. Then you have motor vehicle. What other assets do we have? So additional QCs were furniture and fitting. So I will include that also. Furniture and fitting. And finally, I have motor vehicle. All right. Do you have any question up to this point, please? Like I said, from time to time, just make sure you update the question chat room with your questions. I'm sure my people, my co-hosts are here to always pick your questions, and we will try as much as possible not to. Okay, April is 30 days of September, April, June. Okay, 30 is April, sorry. All right. Okay. All right. Thank you. So let's move on from there. So where are we? If that is the case now, I hope we are good up to this point. Please, if you understand it up to this point, just give me a thumbs up so that we can move on. All right. All right. Good. Makes sense. So now, the next thing I want to determine, don't forget, I gave the rules, and the rules is what we are following. The rule is what we are following, right? So we want to make sure we apply the rule. So we were told that accumulated profit will be ignored. Accumulated profit during the pioneer period will be ignored. But losses made in the pioneer period will be carried forward. Now, I'm seeing in this question that the company had following statements for the first 3 years of operation. I'm seeing net loss. So assuming I'm seeing net profit, I will just ignore all this information here. If what I'm seeing is net profit, I can as well just ignore it. But what I'm seeing here is net loss. So it's going to call for my attention because losses can be carried forward, but profits cannot be carried forward. So I will then come and say computation of adjusted profit or loss. All right. Instead of raising your hand, if you have any question, please drop it in the chat room. My co-host will pick it and then we can move on from there. So that we don't have to waste much of the time. All right. So now, don't forget, we said profit, accumulated profit during the pioneer period is ignored, but your accumulated loss, your loss in the pioneer period will be carried forward to the post pioneer period. Right. I'm deliberately repeating that again. So now we have. Stop it. So let's go ahead. Please confirm that you can still hear me. Oh.
We can hear you.
Okay. Computation. No. Computation of adjusted loss for 2018 to 2020 accounting year. I'm being careful here and I'm saying I'm using the accounting year, right? I'm careful here and I'm saying I'm using the accounting year and it is deliberate. So let's just move on. April 2018, April 2019. April.
We can't hear you again, sir.
Can you hear me?
Yes.
So now let's move on. Net loss. So how much is our loss? How much is our loss so that we can quickly move on? So how much is our loss? How much is our loss? So we have 28,700. All right. So we have 25,500. And we have 20,200, right? So add disallowable expenses. Those are the disallowable expenses that we have. Salaries and wages is allowed. Then transport and traveling is allowed. Depreciation is disallowed. So depreciation. So how much is depreciation? I have 6,800. I have 7,530, and I have 8,600. Then we have next one. We have donations to social club is also disallowed. Of course, your rent and rate is allowed, but donations to social club is disallowed. Emphasis on the fact that it's the social club and nobody is sending you message, right? So donations to social club, how much is that? You have 100, you have 0, and you have how much? 250. Please, can you still hear me? All right, donations. Then the next one you have is allowance for doubtful debt. Specific is allowed. General provision is disallowed. So how much is the general provision? I have 1,850. I have 1,750. And then I have how much? 1,800. General expenses. If there are no additional information to the general expenses, then we can move on and say it is allowed. So how much is the adjusted profit? Please help me with the figure. Post. Please help me with the figure.
First year is 19 minus 19,950
Eh?
minus 19,950.
Next one. Let's do
Minus 16,220.
Next one.
Minus 9,550.
All right. So what they made in this case is loss, Abby. What they made in this case is loss. So if what they made in this case is loss, what I would then do is determination of total loss. In the pioneer period. So I have April 2018. How much is that? 19,950, Abby. Then April 2019. How much is that?
16,220.
Then April 2020. 9,550, Abby. What's the total loss? Total loss, please. Please help me.
$45,720.
See?
45,720.
45.
720.
Still loss, Abby. Okay.
Yes.
So now I've achieved this now because they said that the loss, it was total loss in made during the pioneer period, right? It was loss made in the pioneer period. So now that said, I will form and go and solve for the question. I can now start solving the question. Right. So quotation of adjusted profit. No long stress here. For what's the year of assessment I'm dealing with? I'm dealing with 2022 year of assessment. My next contact period with you is tomorrow night. My next contact period with you is tomorrow night. Right. So how much is the net profit? Based on the new statement we were given, we're provided with the following additional information in note 4. Right. That the net profit is 14,930. Add disallowable expenses. So let's check for the disallowable expenses. Salaries and wages is allowed, at least on the face of the statement. Repairs and maintenance is allowed. Depreciation is the oga pata pata. 1 mark for everybody. So if depreciation is 15,300 allowed, no, disallowed, beg your pardon. Rent and rate is allowed. General admin expenses is allowed. Legal fee is allowed. Accounts and audit fee is allowed. Allowance for doubtful debt is allowed, although we need a breakdown. The bank charges is also allowed. We were told that dividend income was from equity shares acquired from a Nigerian listed company. So that is also telling us that it's only corroborating the fact that your dividend income is franked investment income, and for that reason it should be non-taxable, right? So please remind me not to forget the non-taxable income that we've observed. Then repairs and maintenance, we have repairs of manufacturing industrial plants allowed, maintenance of motor vehicles allowed, improvements to building. Remember I mentioned things around improvement. Anything they say improvement, refurbishment, renewal is capital in nature. IAS 16. Right. So for that reason should be disallowed. So improvement to building disallowed. Then general and admin expenses, transport and traveling is allowed. Advertisement is allowed. Transfer to revenue reserve is an appropriation. You're only transferring from one account to the other. It's just power changing hand. Abi, power must change hand. Even in your exam, it will change hand. Don't worry. You change hand from icon to you. Don't worry. So that's what is happening here. So you have 1,300. Right. The legal fee contains collection of trade debts allowed. Fine. Now you know what you do, you pay fine. So any fine whatsoever, fine and penalty should be then legal expenses for new shares. That's a financial position item, right? That's an equity. So is allowed. The issue there is the issue of shares. Anything capital in nature has to be disallowed. Right. Then allowance for doubtful debt. We have bad debt written off allowed, specific provision allowed, then general provision is disallowed. So we have 3,700. So I think we've exhausted that. So post, even if you go have we exhausted all the information here?
Oh.
22,900.
22,900.
22,900.
Abi? Then less non-taxable income. So that non-taxable income that we have, I think I saw one. Yeah, dividend income, Abi. I know you were asked me now that this time they said grossed up. So the idea there is anything they had as non-taxable, just let them deduct it. So you don't do 90 over anything here. Oh. Anything that was deducted, added, anything that was added, deducted. That's just the logic there. So you don't have to do anything to net it or convert it to net or convert it to gross. So now in that case, adjusted profits. So how much is adjusted profit? Let me read the figure.
36,630.
36,630. So less loss relief. So what is total? The loss made in the pioneer period, what do you have? Unrelieved loss brought forward. How much is that? How much was that? 45,720, Abby. So that's what I'll pick and say 45,720. Then loss relief. You cannot give what you don't have, right? So it must not exceed the profit you made. 630, right? 36,630. So what do you have as unrelieved loss carried down? Unrelieved loss carried down is how much? Unrelieved loss carried down, what do you have?
9090.
90. So that's said. So then I now have to do my capital allowances. So now my capital allowance, I need to do a computation for that. So I'll say computation of capital allowances. So let's just quickly do the table. What are the list of assets? That's where your allocation comes in. So you have non-industrial building, Abby.
Okay.
Next one is what? Industrial building, Abby. The next one is what? Manufacturing industrial plants. Next one is what? Furniture and fitting. So you have motor vehicle. Do you have any other new assets? Well, I think we have furniture and fitting and motor vehicle again. So we can always put that as additional. All right. Total. So you have investment allowance, initial allowance, and annual allowance. What is the non-industrial building? No investment allowance. Industrial building, no investment allowance. Manufacturing industrial plants, investment allowance. Furniture and fitting and motor vehicle, no investment. In initial allowance, what is initial allowance here? You have 15%, 15%, 50%, 25%, 50%. Right? So you have 10%, 10%, 25%, 20%. 20%. All right. So here, the year we are dealing with is 2022. Is it 2022? Let me take my business period to be sure again. 22 highway. Okay. Am I still alone? Oh, you are with me? Please, if you are with me, just give me a thumbs up so that we can be. I can be sure we are following. Oh, that makes sense. Thank you. Thank you. Thank you. So we have your costs. Should I use the word cost? Yeah, it makes sense to use the word cost. And then remember, yesterday I told you that you used to have the examiner play with words, and if he tell you amount, note that he has done the computation already. If he give you cost, multiplied by the number of items to get the amount. All right. So in this case, the man gave us amount. So we want to believe that he has already done the computation by himself. So you have 10,000, 25,600, 12,600, 3,400, and 4,000. Then you have additional assets. You have addition. Now let me come back to those other ones, but let's speak what we have here. We have 500, and then we have 2,200. Remember, we said that. Are you with me? Remember that we said that if the basis for disallowing any asset is because it is capital in nature. I repeat, if the basis for disallowing any asset is because it's capital in nature, and that asset is a qualifying asset, you have to claim capital allowance on it. And I remember that we had something like improvements to building, which we disallowed because it was capital in nature, and that is relating to non-industrial building. So we put 1,200. So what's the new amount? What's the new amount? Please help me. Oh. What's the new amount? Let me be sure you're following. So you have 11,200. You have 25,600. You have 12,600. You have 3,900. You have 6,200. Then you have initial allowance. Don't forget we said that asset purchased in the pioneer period will be assumed to be purchased in the post-pioneer period, because during that period they didn't claim any capital allowance, right? So because they did not claim any capital allowance, we will assume that it's a new asset in the post-pioneer period. So what's 15% of 11,200? What do you have? Hmm?
1,680.
1,000. For 25,600, 15%, what do you have?
3,840.
Next one.
6,300.
Next one.
975.
Next one.
3,100.
Total. Proto. Please help me with figure.
15,895.
15,815.
9595.
95. Okay. I trust you. Abi? I know allowance. So it's cost minus initial allowance times the annual allowance rate. But don't forget that your annual allowance is prorated down to number of months in the basis period, right? So if it is prorated down to number of months in the basis period, how many months do we have here? Luckily, we have 12 months, right? So it means 12 over 12 is 1 year. So just move on. Oh yeah, let's go. Cost minus initial allowance times annual allowance rate. What do you have?
1904.
1.
904.
For the next one, what do you have?
2175.
Next one.
嗯。
Yes. Let's go. Please help me. Oh.
Yeah, please, I'm coming. One 575.
1575. Next one.
585.
Next one. Hope you did times 20% for this guy. But that figure looks much for me. Oh.
It's correct, sir.
Okay, that's fine.
Seven 775.
For the last guy.
Yes.
Now, total. Total.
7014.
7014. Then you have industrial plants, so that's an investment allowance, right? So the investment allowance is only on plant. Don't forget it's plant and machinery and plant and equipment. And it is 10% of the cost of the assets. Right? 10% of the
Sorry,
cost
sir,
of the
for industrial building,
Yeah.
the annual allowance, I told you 2176, not 75.
Okay, 2176.
Yes.
Okay. All right. Is that all?
So the total will be 7015.
7015. Okay. Okay. So let's go. Investment allowance is 10% of the cost of the asset, right? So what's 10% of the cost of the assets? That's how much? 1260. But it does not form part of the taxable value of the asset. So you may put it here as 1260. You may put it here. But if you have stepmother like myself, or to avoid negative home support, right, you don't put it there so that you don't have to mistakenly deduct it going forward. So it does not form part of it. So for me, I will not include it at all. Right. But it's 10% of plant and machinery or plant and equipment. So what's my total now? Because it's only the capital allowance figure I need. Just let me add up the capital allowance. And then let's move on from there. What's total allowances? I'll take it. What's total you have, please? Comfort.
24170. 24170.
4170. So you come here and say less capital allowance to 4170. But obviously, you still cannot give what you don't have, right? So in this case, you cannot relieve anything. So you say unutilized capital allowance carried down.
So please, I don't know. Some people in comment section, they are saying annual allowance for non-industrial building is wrong. So I don't know if you can ask them correct one.
Okay, let me do it myself here. Don't give up. So non-industrial building, Abi.
Yeah, non-industrial building.
So 11,200 times 0.15 is 1680. So 11,200 minus 1680 times 0.1 is 952 you should have.
The rate you put there is 20%.
No, sorry. My
So
bad.
that's why I was getting it wrong.
Okay, no problem. At the end of the day, still me that you God, I beg. So it's 952, Abi. 952. So let me recompute, please. So 952 plus 2176 plus 1575 plus 585
6063.
plus 775 6063, right? Yeah, what's total now? Please help me.
23,218.
Okay. So in that case now, you 23218, right? So you cannot take, so at the end of the day, you still have, sorry, at the end of the day, you cannot take it. So it is still unutilized capital allowance carried down, right? So in this case now, your total profit is nil, right? Then CIT at 30% will be nil, Abi. And then TET at 2.5% of accessible profit. What do you have?
915.75.
So you have 915.75. So total tax liability, what do you have? All right, so let's welcome your questions so that we can be fine. All
So
right.
somebody just said the tertiary education tax supposed to be 2% since it's 2022 year of assessment.
2022 is 2.5. It was financed at 2021 that changed it to 22.5, so, and it became effective in 2023 year of assessment. Finance at 2021 became effective in 2022. So 2022 and 2023 is 2.5%. 2021, 2%. All right. So now, do you have any question? No, I gave that details in the last class, but I'll give it again. So the percentage is for 2020, for 2021 below 2%, 2022 and 2023 2.5%, 2024 upward 3%. You don't need to compute minimum tax because in the first 4 years of commencement, companies are typically exempted from minimum tax, right? And you know the company is still under commencement rule. So even if you are going to, even if you compute minimum tax, you still cannot assess him to minimum tax. Is my point. All right. So this total profit and so Benjamin, can you bring? Okay, Benjamin, can you give us into perspective? Bring us into what is confusing you exactly, so that we can be able to trash it. Total profit is what you get after deducting capital allowance. Assessable profit is your adjusted profit. No, after deducting capital allowance, the figure you always get is total profit. Total profit. So before capital allowance, you typically have your assessable profit. After capital allowance, you have your total profit. All right. So 2021 below 2%, 2022 and 2023 2.5, 2024 upward 3%. Why use assessable figure for own relief loss? I mean, do you mean for the loss relief? Samson, do you mean for the loss relief? Why did I use the? I'm not sure I'm getting you, because own relief loss is the difference between the loss that was accumulated and the profit. So I want to be sure I'm getting your question. Do you mean why did I use assessable profit as the loss relief? Samson, bring us into perspective. Okay. So in that case, what we are saying in that case, or the reason is that you can technically, the simple answer is you cannot give what you don't have, right? And because you cannot give what you don't have, right, what you typically have to do at the end of the day is restrict it to the total of profit. You are owing me and you have a particular amount of money. You cannot give me more than the amount you have. That's the idea of loss relief. So because at the end of the day, once the assessable profit is lower than the loss relief, you just must not take more than the assessable profit, because where will you get the balance? Do you get? So Kemi, no, the idea is for adjusted profit computation, you don't need to gross up. The idea is what was deducted, just add it back because it's not taxable. That's the idea. So anything that was deducted in the initial time, just add it back as the case may be. So Timothy, so for old rule, right? For old rule, you apply it 2019 below, 2019, 2018 like that. New rule 2020 upward. New rule 2020 upward. So I just followed the commencement rule in computing my basis period. So the rule is saying that from the date of commencement to the first accounting year end, right? So what's the first accounting year end is what will guide me on how to determine the basis period. And it's just a function of me knowing the rule and then applying it. No. Assessable profit is before deducting loss relief, not after deducting loss relief. It's before deducting loss relief. Your adjusted profit doubles as the assessable profit. Who will say about that? So in the case where the assets, so at Emmanuel Adefila, yeah, investment allowance was September 2023. So then it is asset purchased after September 2023 that does not qualify for investment allowance. So say 1st January, 2nd January, and the likes, you still claim investment allowance. Asset purchased after September is what does not qualify for investment allowance, because laws do not have retrospective application. Laws do not have retrospective application, and you don't prorate investment allowance. You don't prorate the investment allowance. So the idea again for is whatever is an income, whatever was added in determining the net profit, just deduct it. Just deduct it. I think I've answered K in there already. No, Abigail, I know you still make that mistake, right? But accessible profit doubles as your adjusted profit. Again, it is only in the case of oil and gas taxation. That's when your accessible profit can be different from your adjusted profit. But for company income tax, the adjusted profit doubles as your accessible profit. I didn't get by percentage. By percentage, what do you mean, Ashai Samson? All right. Then, pending the term that you clarify, let me move on to, can initial allowance be prorated? No, it cannot be prorated. Yeah, so it's exempted from tax. It still qualifies as non-taxable income, provided it was added as part of the income bracket before, right? So it's still non-taxable income. If it's the idea of non-taxable is it's exempted, that's the idea of non-taxable, exempted from tax. But the accountant has already added it as part of the revenue for the entity. So you just have to deduct it this time around to just show that okay, the revenue is not overstated. 2022 year of assessment. Yeah, maybe you should bring up the question, and then the question will guide us as to why they use 10/110. But the idea is whatever was added to your income should be deducted as non-taxable income. No, it's the same. It's the same for the asset. It is
Hello everyone. I think he has network issues, so let's just wait for him.
Hello, sorry, I was logged out at some point. Hey, my messages were cleared. God, I beg. Host, please, Oko, Clement or uh, Comfort, can you please continue from where I stopped? Clement or Comfort?
So, from where exactly?
Uh, I stopped at where Samson Ashai was asking about um, the unallowance rates, the unallowance rates difference for Peter and Sita, and I've answered that. So you can just start from there. Okay. While you do that, can you assist with more clarity when the basis period is prorated? So you mean when the annual allowance is prorated is when the basis period is less than 12 months. So for the first year of commencement, if the basis period is not up to 12 months, you then have to prorate the annual allowance down to number of months. That's 12 months in the basis period. All right. Exactly. Yanolua. That's it. All right.
So
Yanolua,
I think
that's it.
there was a question you skipped. The person was asking that investment allowance was scrapped September 2023. So she was asking that what if the base period is from January 1st, 2023 to
Yes.
December to 31st December 2023. How do we treat it for investment allowance?
So yeah, I think I attempted that. And again, the annual allowance or the investment allowance started September 2023. Laws do not have retrospective application. So by implication, if you do 2023 up September 2023 upward, you don't claim. So if the asset is purchased September 2023 upward, you don't claim. If the asset is purchased before September 2023, you claim. Does it make sense? So say asset was purchased in June, you claim the investment allowance in full. Whereas it was purchased in November 23, you don't claim investment allowance. All right. So obviously, if you don't have data to compete for the following year, you just have to stop where the data stop. That's the idea. That's for bookie. So because I don't have data for 2023, so there's no way I would have completed for 2023. You don't manufacture figures for the examiner. Okay, so that I won't have to drag people behind. We had a class on basis period. I would like you to watch the video on basis period, and then if you need further clarity, you can reach out to me. I'll be willing to answer. But new rule is actually it's a function of basis period. That's to say that the year of assessment is going to be on actual year basis for the first year, and the basis period will be from first date of commencement to 1st December of that same year. Second year from the date of commencement to 12 months period. Third year must be on preceding year basis. It must end in the accounting year end. If it does not meet that rule, you repeat year two in year three. For the new rule, the year one is from the date of commencement to the first accounting year end, and it must be on preceding year basis. The second year, you start a day after the previous year to the next accounting year end. The third year, you start a day after the previous year to the next accounting year end. At any rate, ensure that you avoid gap or overlapping in the basis period, and the basis period must not be more than 12 months any or at any instance. All right.
Okay, so Asata, please, I have a question concerning this
Yeah.
computation of adjusted loss. Okay, so for I think all the years we treated, they had net loss. For example, now for April 2019, if it was a net profit, how are we going to treat it? Is it that we're going to ignore
So it
2019
is the
entirely?
net of the. So what you do is that you reduce the total loss by the profit they made in that year, right? So say 2019 was a profit. So what you have is 2018 loss minus 2019 profit plus 2020 loss. So that way the loss to be carried to the post-pioneer period will be reduced by the profit in the pioneer period. Does it make sense?
Yes, sir. Thank you.
You're welcome. All right. No, I'm not sharing my screen. So again, it has been scrapped, right? But if your examiner is a woman that remembers the old things, because last diet, or 2 diets ago, I think November 2024, so it is based on the, how do I put it now? So they tested something like that. All right. I hope I've answered your question.
Someone just came. There was like any treatment for bad debt recovery, like bad debt
So,
recovery. Is there any
it,
treatment for it?
so the idea there is that it when it was written off, right? When it was written off, it was expensive. It was allowable. So when it's coming in now, recovery is now an income. So it's taxable by implication. Because we forgave you when you didn't have it. So now that you have it, we should get our money back. Abi? So that way, that's the idea behind it. Please try to use the chat room. We don't want to have disrupt the class. Yes, Abiodun, yes, because the capital allowance, what the capital allowance is forbidding is that there should be no gap overlapping in the basis period. And the same thing, it should, how do I put it now? There should be no gap overlapping in the basis period. And that's what the new rule is saying. So that way, it's also going to be the same thing. Yes, unutilized capital allowance is to be carried forward to the following year. Unutilized capital allowance will always be carried forward to the following year till the time it is utilized. All right. Yes, the reason we didn't treat it in the solution, we treated it, but obviously we are not dealing with taxable income because bad debt recovery is taxable income by implication. So, and it was recognized as an income. That's why we didn't bother treating it already again. In what context, Simi? Simi? Or Simi? Anyone? So the computation of net loss does not apply it only applies for the pioneer period. Obviously, for a company that is not within the pioneer that is normal, that is not within the pioneer window. So if you do the net loss, the first question we solve that in COA is the way you apply and treat that. So you treat the loss as if it were to be profit, and then you just adjust it. So at the end of the day, if you still get adjusted profit or loss, that's what guides you. If it is loss, you do minimum tax. Yetunde, am I able to clarify? So yeah, it's 10% of the cost of the asset. 10% the cost of the asset. That's for Sulaiman, 10%. So for companies, to be carried forward for 1 year. Yeah, losses can be carried forward for 1 year for pioneer companies, but for normal companies, losses are carried forward indefinitely. Pioneer companies, losses are carried forward for 1 year. That means you can only relieve it in the first year of the post-pioneer period. So by implication, it means the 1990 we have here cannot be carried forward because you can only relieve the loss in the first year of the post-pioneer period. For normal companies like that in Kowa that we did before, that is not under the pioneer rule, losses can be carried forward indefinitely. Right. No, so taxable in that context simply means that it should form part of your income, so you can just as well ignore it. That's what I mean. Simi, I hope I've answered your question. What of note 4? To be honest, I don't know what is in note 4, but let me check. Exactly. Because of the note 4, we are computing for 2022. Assuming we have same information for 2022 accounting year, would have been or would have computed for 2023 of assessment inclusive. But because note 4 restricts us to 2021 and that 2022 year of assessment. Yes, we are still solving one more question before we move on. Yeah, the class is supposed to end by 11, so we still have time. I didn't get your question, but minimum tax is at 0.5% of turnover less franked investment income. So pioneer period is not 3 years. It is 3 years, then renewable for 2 years. So maximum 5, minimum 3. So investment allowance is 10% of the cost of the asset. Right? Investment allowance is 10% of the cost of the assets. That's what I was trying to say. You don't need to gross dividend, is what I'm saying. Just you don't need to gross it, but in case you want to gross it, it's 10/90 to gross it. If you want to gross it, it's always 10/90 to always gross your dividend. No, what did I say? I mean 110/100. Yeah. 110/100, yeah. Or 100/90. All right. So 3 years. So now the company has a liberty to apply again this dividend. You don't have to gross it. Whatever was included, use it again. If it was net that was used, use it again. If it was gross that was used, use it again. That's what I'm saying. You don't need to gross anything up. That's my point. Olajumoke, I've answered. You don't need to gross anything. So whatever was included as taxable income, as income, just help them add it back. That's all you need to do for them. Right. Okay, so you have a rundown, but basically what we are doing is past question review. What we are doing basically is past question review. So I hope that is fine. Have I treated all the questions, please? So what the law provides is that you less franked investment income. Yes, so that's what I'm saying. By reasons, how do you mean? Um, by reasons, how do you mean? I'm not sure I got that, but I don't know what you mean by reasons. Can you please clarify? Yeah. Yes, there are conditions. It is always a license that should be granted. It is always a license that should be granted. So if the guy qualifies for the 2 years extension, then he will be given the license. That means your pioneer period extends to 5 years. If it doesn't meet up, then it is not going to be to 5 years. So the criteria, so compute it at any at I mean for any question, provided the question is not under commencement rule, is not a small company, and it is not an agro-allied company. So compute minimum tax for um, the that. So conditions to be met: one, your asset size must be the asset size must be 100 million, right? Your asset size must be 100 million or above, 100 million above. Then it must be able to capable of generating employment, then value addition. 0.5%. 0.5% is what to apply. Basic food item is non-vatable. So it depends on what you are selling to them. If it's food or fertilizer, you don't add VAT. It's not vatable. Right. It will always be kept in brackets. Always be kept in brackets. So the idea there is ginger is basic food item to me. It's not luxury. So you don't include VAT. All right. So that said, let's continue with our exercise. Can we move on? Comfort, can we move on?
Yes, sir.
All right. So let's look for. Don't forget, my attempt has been that I want to make sure you're able to solve question 1 comfortably. So let's look for. I think there's other question I want to solve. But don't worry, let me quickly treat oil and gas. Or what do you think? Or do you want me to still treat one more question on Pioneer? If you want me to treat one more question on Pioneer, please. I like democratic system of government, although it's not the fairest system of government. Oil and gas, oil and gas. I know oil and gas, oil and gas. So if you want oil and gas, just say oil and gas. If you want oil and gas, just say oil and gas. Okay. So let's quickly do one more question on Pioneer and then one more question on Pioneer. But like I said, your number one is likely going to be common income tax. Then if we don't find common income tax, it's okay, it's okay. If you don't find common income tax, then you always find Pioneer. So it depends on what you want to do. Right. Can we solve this question? Island. Can we solve May 2023 question? May 2023 question. Was this Pioneer? November 2024. So your assignment here, please, as your assignment, please solve November 2023. No, wait, let me check the year. May 2023 question 1. May 2023 question 1. Oh, sorry. Stop it, stop it. Let me check.
Oh. Oh. Da. 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 It's a person. Da.
Stop it, stop it. So let's make do with last diet question. Okay, so let's go. Who's reading? Yeah. Coast. Okay. So coast to, can you see my screen? Host, can you see my screen?
Yes, sir.
Yeah, please go ahead.
Kulanim Nigeria Limited. Okay.
Start from the requirements.
As the newly engaged tax consultant, you are to prepare a report in line with the provisions of Companies Income Tax Act C21 MFN 2004 as amended for the attention of the managing director of the company, showing explicitly A. Adjusted profit for the year ended December 31st, 2022. B. The tax liabilities of the company for the relevant assessment years. Ignore minimum tax provision. C. Comment on the tax implication of gross dividend declared for the financial year ended 31st December 2018 and 2021. D. The implications of the company's pioneer status and tax liabilities if the investigation by the tax authority on the company's activity during the second half 2018 is validated.
All right. Let's move on.
Kulami Nigeria Limited, a manufacturer of industrial alcohol, was granted a pioneer certificate for an initial period of 3 years on January 1st, 2016. At the expiration of the pioneer period, the company's management did not apply for extension of the certificate but continued in the same line of business. The company has just recovered a query
So I
letter.
think what we should do, hello, I think what we should do is let's adopt that same approach. Kola name, Abby.
Yes.
Yeah. So let's start making our points. Okay, Abby. First one, don't forget we said the date you were granted the pioneer certificate is called the production day, Abby.
Yes.
So what is the production day here?
January
Production
1,
day
2016.
1/1/2016. Then, if that's the case, the next question I want to ask is, will it does it apply for extension?
No.
No. So if it does not apply, so you say pioneer period ended when? Ended 31 December 16, 17, 18, 20.
2018.
Right. So date of commencement is what? That's 1/1/2019.
1/1/2016.
Right. Now, I hope you're able to deduce. You get how I'm able to deduce those points from there. So go ahead.
29. Okay. The company has just received a query letter from the tax authority in respect of its production and sales of yeast between June and December 2018, which according to them was not part of the approved product as specified in the company's pioneer certificate. As the consequences of the issue raised in the query letter have some financial implication, you have been engaged by the company as its tax consultant to assist in handling the matter and to also help in the computation of tax liabilities and filing of annual returns for the just concluded financial year. The following information was extracted from the record of the company for the year ended 31st 2022. Assumed all figure correct. Additional information in respect of the record for the year ended December 31st 2022. 1. Other income. Included in other income was 1,440,000 dividends received from investments in a Nigeria listed company. 2. Donations and subscription. Subscription to Manufacturers Association, subscription to some employee professional bodies, donation to National Library. 3. Legal expenses. Legal reacquisition of office lease, debt collection, retention short lease. 4. Allowance for doubtful debt. Specific provision, general provision, debt written off. 5. General expenses, postage and telephone, transport and travelling, penalty for late filing of returns, customized promotional gift to customers. Other relevant information. 6. Adjusted profits or loss during the pioneer period year ended 31st December 2016, 17 and 18. 7. Summary of turnover and adjusted profit in the new business year ended 31st. Turnover and adjusted profit. 8. Schedule of qualifying capital expenditure incurred during the pioneer period. Date of acquisition November 12, 2020, November 13, 2015. Non-industrial building 25th November 2015. Industrial building, plant, furniture and fittings, motor vehicle. 9. Schedule of qualifying capital expenditure incurred in the new business. Date of acquisition, QCE and amount. We have furniture and fittings, plants, motor vehicles, industrial buildings, plants and motor vehicle. 10. Scroll down, sir.
Okay. Okay. So I do not. How do I get this point? Okay. Okay, this is where we are. Be. What point do you want to read? Yeah.
Scroll up.
Yeah.
Okay, the furniture and fitting that well, the furnitures and fittings that cost 600,000 were disposed of for 100,000 on January 1, 2018, and the entire proceeds received were applied to the acquisition of new set of furniture and fittings on January 13, 2019. 11. Dividend gross declared year ended 31st December amounts given for 2018, 2019, 2020, and 2021. That's all.
What do you want to tell me now? Who must set this question? Anyway, let's move on. So let's start. Don't forget we've been able to pinpoint the major issues here, right? So now let's start with competition. What is the first thing they ask us to do? They ask us to compute the adjusted profit. But then before I do that, since the company commenced in 2019, I will want to check, right? Do I have information that will make me do commencement? So in that case, what I want to do is determination of basis period. Determination of basis period. So I will do determination of basis period, capital allowance and allocation of QC. Please, can you all hear me?
Yes, sir.
All right, so yeah, by the way, basis period. So where do we have? So we start from 1/1/2019. Obviously, 1/1/2019 is under the old rule. So it's going to be on actual year basis, right? To 31st December 2019. And it has to be on preceding year basis, an actual year basis, beg your pardon. So you have 2019 year of assessment, right? That is the basis period for the first year. The second year, are we still together, please? The second year, 2020 year of assessment, are we still together?
Yes.
So 2020 year of assessment, if you try it anyway, you will still realize that there's no basis period. But let me practicalize it. Don't forget 2020, you have to do the new rule. New rule is saying it must be on preceding year basis, meaning that you must start from 2019 kind of thing, right? So you say 31 December 2019. Already, you are repeating, the basis period, right? Which the law is against. So for 2020, there will be no basis period. There will be no basis period. Then when it's 1 year of assessment, you have a day after the previous year, 1/1/2019, 19 to the accounting year end. So the company's accounting year is also 31st December. So we'll say to 31 December 2020. Beg your pardon, I mean 2020, not 2019. 2020 to 31st December 2020. And then the next year you will do 1/1/2021 to 31st December 2021. All right. So I will check again. Have I exhausted all my information? Have I exhausted all my information? Is that the maximum year I have? So I still have up to 2022 accounting year, yeah. So I will say 2023, right? 1/1/2022 to 31st December 2022. I will do the same thing for capital allowance. Luckily for me, there is no gap overlapping in the basis period, right? So I can repeat my basis period for accessible profit as basis period for capital allowance. Twenty 21 December 22. All right. Do we understand it to this extent? Do you get it to this extent?
Yeah.
Okay, good.
Yeah. Yeah. Yeah.
All right. If you get it to this extent, so we
Yeah.
do you have any question you want to ask me? It's based on, so the 2019 was selected based on the question we have. Again, this question stated that they commenced business on 1st January 2016. I mean, that's when they granted the certificate. So you start counting from that 2016 because it was granted in January. So the first accounting year end, the first accounting year end will be 31st December, right? It will be 31st December 2019 because you are 2016 will be the first year, 17 will be the second year, and the 2 will be the third year. Right. Do you understand?
Baby, please mute yourself. Oh.
Hello, can you hear me? To be honest, my son can be very funny. Oh. Is actually very, very funny. Sorry. I'm very sorry for that noise. Please pardon me.
It seems he likes his dad.
I don't tire. So now the point here. So do you all understand? Well, let me give you let me allow you. Do you understand what we've done so far? Okay, let me just for please raise your hand if you have any question that you think the message cannot really convey. Type message cannot convey your message and you feel you want to ask. So okay. So I have only Judith and Adenike. So only the two of you, I will unmute everybody, and only the two of you will be permitted to speak. All right, I'm calling. Just a minute. Can you see my screen? Sorry, I'm about to mute. So only the two of you, okay? So Judith, what's your concern?
Okay, good morning, sir. Sorry to
Yeah.
take you back. My concern is this final legislation. I seem not to understand it. I understand the basis period that you're trying to explain, but the final legislation, at what point that a company is being given a pioneer is it incentive or whatever? Please, I
So
just need
the
like
company applies for the incentive, right? So the incentive, the cap of the incentive is 3-year tax holiday. Then you can get extension for additional 2 years, right? So the maximum you can do is 5 years. Does it make sense? So now, then what you're looking out for in the question is, does it get extension or not? Right? So this guy does not get extension. Because he did not get extension, it means it's already started from January 1, 2016. It means December 1, 2016 made the first year of the holiday. December 2017 makes the second year of the holiday. December
okay,
2018 makes the third year of the holiday. It
okay,
means he's expected to start paying tax from January 1st, 2019. And that's why
okay,
2019. So the time we expect him to start paying tax will now be the date of commencement for the question, technically. Because during the pioneer period, he's not expected to pay tax.
okay, okay. Thank you, sir. I'm grateful.
You're
Thank you, sir.
welcome. Abigail,
Thank you. Let's go back to the year of assessment. I think the first year of assessment should be 2020, not
okay.
2019, because I'm not getting it. When you say 2019 and your basic period still remain 1st January 2019 to 31st 2019, because the rules say that is preceding year basis. So why are we still having actual year basis in this
Okay,
first
so
year of
now
assessment?
thank you for your question or clarification. So now let's look at it this way. I will ask you, you answer, and then you will still you will determine after. So for 2019, are we using the old rule or the new rule?
New.
No, you are using the old because the new rule started in 2020, not 2019.
Oh, okay, okay.
So you use the old rule beginning from 2020. So for 2019, it is the old rule you'll be applying. And the old rule is saying from the date of commencement to the
The end of
31st
the
day
year.
of the same year, and it's on actual year basis. Do you remember?
Yes, yes,
Okay, so that I've answered the question.
yes. Thank you.
You're welcome. So I think those were the
Okay,
two
sir.
people that indicated. Yeah,
Okay, sir. Just to be sure of what you're saying, that means, for instance, if in an exam condition they gave us a question that the years involved is before 2020, that means for the all the years of assessment will be on the old rule.
correct.
So if the year first or second year of assessment is before 2020, we'll use the old rule application on those 2 years, and then the 2020 onwards we'll use the new rule application. I don't know if I'm
Correct.
correct, sir.
Correct. That's
Thank
that's
you.
the implication.
Thank you, sir.
All right. So I think that addressed our concerns here. So let's move on. Those were the two people who indicated interest at the time. So I will possibly there will be a next window that all of us will be able to speak again. Hopefully we have that window. Sorry. All right. Sorry, just a minute. I don't like doing this, but I just have to do it. So now let's deal with allocation of. So let's deal with allocation of QC. So how do we allocate the QCE then? Now we allocate, don't forget our rule. We said asset purchased before the date of commencement are deemed to be purchased on the day of commencement. Assets purchased before the date of commencement are deemed to be purchased on the day of commencement. If that is the case, here, right, what you have to do is that you will have to now come and start allocating all assets purchased during that commencement period at the first year of commencement. So do you have assets purchased during the pioneer period? Yes. Note 8, schedule of qualifying assets incurred during the pioneer period are non-industrial building, so automatically they fall in the first year of commencement. NIB, IB, plant, F&F, motor vehicle. I really do not need to bother about when it was purchased. My concern here is it was purchased before the date of commencement, and therefore it has to be, or it has to follow the new rule. It has to be allocated based on that first year of commencement because they were incurred in the pioneer period. Now let's move on to note 9. We're told that acquisition of assets in the new business, invariably, technically, you will consider the new assets, the new regime, right, as if it were to be new business, because that's why we are doing commencement through. So it may be that there's no new business, quote and unquote, it's still the same business, but in the face of the tax law, the new business is just commencing. That's why the word new business is used. That's why I feel it's necessary for me to clarify the term new business. Does it make sense? Right. So now let's allocate based on that. So what's the allocation? Right. So we have January 13, 2019, F and F. We have February 15, 2019, still in the same year, plant, right? Then we have motor vehicle, July 2019. We have industrial building. Wait, I'm allocating wrongly. It's 2019, not 2020. So it's still supposed to be the first year. Sorry. So F and F. F and F. Then we have, what else do we have? Plant. We have motor vehicle. Then 2020, that's the next one. So we have industrial building. Right. Then for plants, we have 2021. This question is simple, but it's just that the stuff is much. So we'll solve it, don't worry. Motor vehicle. All right. Are we good to go? Are we good to go?
Yes, sir.
All right. I hope we are all clear to this extent. Right. If you are with me, please thumbs up so that we can move on. Be fast so that we can drive at least better engagement from there. Okay, makes sense. Thank you. So if that's the case here, what I want to do again to get one small cheap mark is to start computing my adjusted profit for the 2023 year of assessment. Because I know the examiner is part of the things the examiner would want to see. So adjusted profit for the year ended 31 December 2022. So that's 23 year of assessment, Abby. All right. So I will start and say computation of adjusted profit for 2023 year of assessment. Right. Clear? So let's start. Net profit. How much is net profit? Net profit, how much? Net profit, how much is net profit, please? Help me now. How much?
29,730.
29,7. So add the salariable expenses. All right. So salaries is allowed. Repairs and maintenance is allowed, right? Your ground rent and rates paid is allowed, right? Your donations and subscription is allowed, at least for now, right? Then, are you with me? Then your finance, your depreciation is disallowed. So let's include that. At least that's the free one mark. Motor running expenses is allowed. Finance cost is allowed, right? Legal expenses is allowed. Preliminary expenses disallowed. Preliminary expenses is disallowed. Right. Allowance for audit and professional fee is allowed. Allowance for doubtful debt, we need to see the breakdown. Right. Then your general expenses is allowed. Insurance is allowed. Other income includes dividend received. So that's a non-taxable income. Please don't let me forget. Please remind me. Are you with me? Am I alone?
We are with you.
So now donations and subscriptions. We have subscription to manufacturers association allowed. Subscription to some employees professional bodies is allowed. Donation to National Library is also allowed. Right. So let's go to legal expenses. Legal expenses, reacquisition of office lease is disallowed because we would imagine that it's a long lease, right? And that's to do with acquisition. So let me just put it in bracket. Legal debt collection is allowed. Retainer short lease is also allowed. So out of this legal, only 950 is disallowed, Abi. Then allowance for doubtful debt, only the general is disallowed, sorry. General is disallowed, specific is allowed. So general is how much? 400. The next one, do you have? Debt written off allowed. Postage and telephone is allowed. Transport and traveling is allowed. Penalty for late filing is disallowed. Right? Customized professional. Are you with me?
Yes, sir.
Customized promotional gift to customers is allowed, but to staff it is disallowed. Staff disallowed, customers allowed. Does it make sense? So what do you have? Sorry. What do you have? What do you have? Please help me. Please help me.
8325.
8325. Then less non-taxable. So what is the non-taxable income? We saw dividend, Abi. How much is dividend? How much is dividend income? 1 4, Abi. So what's the adjusted profit? How much is the adjusted profit? Please help me.
36,615.
So at least with this, we're good. So let's move on. Then I will now go and then start computing my capital allowance. Now, I would imagine that you would want to ask me that why didn't I compute for the other years? The examiner is so kind in that he has already given me adjusted profit and loss during the pioneer period. And he also gave me, I think I saw something around adjusted profit somewhere. Yeah, note 7. He has given me 2019, 2020, 2021 adjusted profit. Right. So I need not bother myself about that again. Right. So that's why I just have to do for 2023 that he wants me to do. So now, but now there's an issue here. In the pioneer period, they made profit and loss. Have to determine the net loss or profit during the pioneer period. Right. Remember, can you hear
Yeah.
just our loss in the pioneer period? So you have 2016, you have how much? 14,700. You have 2018, 17, beg your pardon. 2017, what do you have?
12,200.
Then 20,
Mommy, 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 mommy.
yeah, what do you have?
Minus 23070.
Net loss. What do you have?
23,070.
2307.
All right, makes sense, Abby. So this loss will be carried forward to the post-pioneer period. I hope you are getting it as we are doing it slow and steady like this. Right. So the next thing you want to do is computation of capital allowances for 2019 to 2023 year of assessment. Are you with me? Are you getting tired?
We are with you.
Please don't be tired, though. Wait, I think I've made a mistake somewhere. So that you make it. Waiting, so I think this arrangement is there's another. Sleep now. How come? Wait, what? Wait, oh. Is there a problem somewhere? Okay. All right. So I think we're good, Abby. So what based on our allocation of QC, we have non-industrial building. We have industrial building. What else do we have? We have plants. What else do we have?
F and F.
We have furniture and fittings, Abby. So what do you have? I think that's what do they all belong to this class?
Motor van. Motor van.
Where's Mitovan? A party country. What else do we have? That's all I'll be.
That's all.
All right. So in this case now, all right. So in this case now, you have your investment allowance, only 10% on plants, right? Are you with me?
Yes.
Your initial allowance. So here you have 15%, 15%, 50%, 25%, 10%, 10%, 25%, 20% with 25%. Here you have 50%. All right. So you have this. Now, so you have 2019. Right. So you have cost. What do you have as cost? Asset purchase on depot. We have 15,000 for non-industrial building, Abby.
Yes.
We have 12,000.
12,000.
Plant.
6,000.
6.
62.
Furniture and fitting is how much?
24.
Then motor vehicle, you have what? For
48.
then do we have addition during the period? Any asset allocated? Yes. Yes, you have furniture and fitting. How much?
4,000.
We have 4,000.
Plants.
We have 7 for Abby.
Yes.
And then what else do we have?
Motor vehicles. 5, 6. Industrial building.
It has to be based on allocation. Industrial building is in the next year.
Okay. Yeah.
Total.
Yeah.
What do you have?
19,000.
The 19,000.
19.
12.
12,000.
Next one.
13,600.
Next one. 4.
10,400.
10,400. Okay. Right. So then we have, let's just do an investment allowance always on plants, but at 10%, Abby. They have 1,360, Abby. Initial allowance 15% of 19,000. What do you have?
So, furniture and fitting is 4,000.
Furniture and
I
fitting is
think
done.
addition 4,000.
Okay. There's an additional furniture and fitting.
Yeah.
Okay. Thank you.
That's 6,400.
Okay. So that makes sense. So let's go.
So
Let's
please,
go.
the non-industrial building that you added 4,000, is that supposed to be there? Because
Oh,
4,000 is for
it
furniture and
was
fitting.
the front and fitting that was supposed to be. Oh, sorry.
Yeah, so you have to remove it.
Sorry. All right. So what's 15% of 15,000?
2,250.
Next one.
1,800.
1,800. Next one.
6,800.
Next one.
1,600.
Next one.
5,200.
Like this.
Yeah, 5,200.
Right. So what's the total?
17,650. 17,650.
Then you have annual allowance. So that's cost minus initial allowance times the annual allowance rate, Abby. So in this case, you don't have to prorate, right? Because you have 12 months in the basis period. Does it make sense?
One thousand two seven five.
Hmm?
1,275.
Next one.
That is the comments. They are saying there's additional F and F. I don't know.
Additional F&F. Yes, that's the 4,000 we recognized. So you did your 25% on 6/4, Abby.
Yes.
Okay, that's correct.
I don't know what they're saying on the
Okay,
message.
who is that? Yeah, F&F 44. F&F yet.
Someone is talking about note 10, that F and F was disposed.
Continue.
Yes.
Okay, note 10, note 10, note 10, note 10, note 10. Okay, okay. The furniture and fittings cost 600,000 naira were disposed of. Okay, I think I get your point. So note 10, thank you. Now, the furniture and fittings were disposed, Abi. 600 naira worth of motor vehicle was disposed, and it was disposed prior to the pioneer period. So what you're supposed to do is 2,400 minus 600. That's the cost of the assets. Do you understand? Let me do the workings here. Determination of costs of F&F. Thank you very much. I didn't note that. So you have your cost 2,400 less disposal. So disposal is how much? 600. Are you still with me? Comfort.
Yes, sir.
So what is the new value? So the new amount will now be amount New.
1,800.
So that's the new amount. Thank you. I don't, and I needed that before. How did I now skip it? Stepmother came around. Sorry. So what's going to be the new value now?
5,800.
So what's going to be the initial allowance?
1,450.
Okay. And I believe it will affect your total colon. What do you have?
7,500.
Okay. All right. So what do you have next?
1,020.
That's cost minus initial allowance times then allowance rate, Abby.
Yes.
Yeah, next one.
1,700.
Okay.
870.
870.
Next one.
1,300.
1,300.
Yes.
Total now. What's the total amount?
6,001. 6,165.
6-1.
65.
So what's now the taxes now value? What's the taxes now value? I have to do taxes down value in this case because I'm doing for 4 years.
Minus 225.
No, you can't minus now. Do start from okay. You mean for the total?
Yes.
Okay. 25.
25,025. 025.
Hello, can you hear me?
Yes, sir.
Okay.
Just
Can you see my screen?
2 million. Yes, sir.
So what do you have total? Please help me.
25,025.
So now let's move on. What do you have here?
Eleven four seven five. Nine one eight zero.
Next one.
5,100.
Next one.
3480.
Next one.
3,900.
Right. So then you now do there's no 2020. There's no 2020 to check 2021 year of assessment because there's no year of assessment 2021. 2020, right? So move to 2021 year of assessment. So let's start. Do you have any additional assets?
IB.
IB. So how much is IB? Ibadan. How much is IB?
18,000.
Okay. What else do we have? I think that's all.
That's all.
So for this, we can only claim initial allowance, right? So what's the initial allowance? That's 15% of 18,000. What do we have?
2,700.
All right. Then you have annual allowance. So here you have 1275. Yeah. In order to avoid confusion, and which I advise you to do in the exam, always separate the old from the new assets. It will, although it's longer, but it makes it clearer for you. 1020 1700 300. What's data? I think you should still have 6165.
6165.
Then annual allowance, new assets. So what's the annual allowance for the new assets?
$1,530.
On the new assets, you did 18,000 minus 27 times 10%, Abby.
Yes, sir.
Okay. So what's the new taxes now value? What's the new taxes now value?
200. Wait, though.
Abba.
4,
12,750.
1, 2,
What's it
7.
12,750.
for the total, Abby?
For this industrial,
For
1,000.
the first,
no, industrial building.
10,200. NIB.
Okay, industrial building is how much?
10,200.
Yeah, no,
No, that's
NIB.
industrial building.
yes.
Okay.
So the IB is how much?
12,750.
Oh, that's wrong. Now you didn't add the taxes down value to it.
Okay.
What do you have? What do you have?
1,930.
21,930.
21,930.
So
21930.
I doubt the 30 behind though.
That's correct.
No, 51 minus 17. Please try it again.
34. 3,400.
You see now.
Oh,
See that. Next one.
Two
Yeah,
thousand
what's
six
that?
2610.
Next one.
2,600.
2600.
Eh?
2600.
Allowances.
2600.
Total allowances.
40,740.
What do you say?
4740.
So you're supposed to add only the total colon. This is what you're supposed to add though. Only the total colon you are not you're adding the colon to the rows. I mean you're adding vertically, not horizontally for the total.
Are we not going to add
Do you
the
get? No,
total
don't
one
add the
down
previous
for
year to it. It's only no. It's only for the year. Capital allowances is always for the year. Please take note. Capital allowances is always for the year.
Minus
What do you have?
10,395. Minus 10,395.
All right. So then I have 2021. So you have the. Well, I believe we have additional assets. Right. So we have plant and motor vehicle. Abi? How much is plant?
8880. 8,880.
880. Then motor vehicle is how much?
84.
8
8,100.
for sure. Abi. Come on. So what do you have? What do you have? Please? What do you have, please? Ah,
We can't hear you very well. Your voice is breaking
how
and the
about
screen is not showing. The screen is not showing.
now?
Yeah, the screen is showing, but your voice is breaking.
How about now? Is it better now?
It's fair.
Hello? Hello?
We can hear you now.
So let's go ahead.
That is important.
That's good.
Hello, go ahead.
Initial allowance for plants is 4,000 4440.
What do you say?
4440 for plants. Initial
4440
allowance.
on no, that can't be now. 15%. 10,000. Please try again. Hello, are we together?
1020.
No, that's 10%. You're still not correct. You should have 1530. Is that what you have? Abi, you want to give up? Oh, sorry, I'm doing making mistake. Oh, my eyes on industrial building.
Is it not
Sorry. How much is
allowance
it?
that
50%. That's 4440.
4440. Okay. Sorry, ma'am. Sorry. It's my stepmother that came visiting. Sorry, eh? My eyes was just on NIB. Sorry. Then your motor vehicle, how much is it? 42, Abi. What do you have? 86. 8640.
640.
Abi. Then you have annual allowance. How much is annual allowance? So for this, I still have 1275. For these, I have how much? One. So add the old and the new together at this point. What do you have? 1020 plus 1530. What do you have? Please help me. So what do you have?
2550. 2550.
Next one. So another allowance of the old asset is how much? 17. Then is 870. Then for this, I want 1300. So what do you have as total assets? What do you have as total assets?
795.
Hmm?
7695.
7695.
Yes.
Then you have annual allowance. Old assets. What do you have, please? Annual allowance of the new asset. Beg your pardon. What do you have? Please help me. Oh. So that's 880 minus 4440 times 25%. What do you have, please? Please help me.
1110. 1110.
Yeah?
1110.
Then for the other one, what do you have? What do you have, please?
1050.
So what's the total?
2160.
Right. So what's the tax system value? So 102 minus 1275. What do you have? What do you
Sir, how do you get that 1275, sir?
1275? Which 1275? So it is the amount from the previous year that I brought because it's on straight line basis. Yeah.
The tax written down value for the total, not this one. This total here is minus 19383.
1938.
383. 83.
Okay. So which other one?
8925. The
Which
first
of
one.
the assets?
The first one, I think one industrial building. The first one.
Eh?
The first one,
Yeah,
non-industrial
what's that?
building.
Yes, what's that?
8925.
Next one.
1938.
19.
380.
Okay, next one. Don't forget to add the tax number value of the previous year to this new one.
Five zero three zero.
Next one.
1740.
17. Next one. 1740 or 46.
40.
Okay. Next one. Next one.
4450.
All right. So then you do 2023. But this question is also unnecessarily long now. This examiner is a woman. So there are no addition, Abby. But at the same time, we have annual allowance. So you have to be careful at this point. But I know industrial building will take me 10 years, so I can conveniently still work on this. I know my industrial building will also take, so I can still conveniently work on this. But I have to be careful here for plants, right? Plants, this is year one for plants. This is year two for plants. This is year three for plants. This is year four for plants. Are you with me? And remember the 10 error rule that the law provides that you should always keep 10 error as the tax value of the asset for the asset, right? So if that's the case, what you apply here, right, is, are you with me?
Yes, sir.
Is the total allowances minus 10 naira. Don't forget that you are taking your assets at this thing. So this case now, what you are doing is 1,700 plus 1,110, 1,110 minus 10 naira. So what in very what I'm saying is that you do 1.7 million plus 1,110,000 minus 10 naira. To bring it to perspective, what I'm saying is this: your annual allowance is 1.7 million, right? Plus 1,110 minus 10 naira. So you have 280.99. 2809.99. Have I convinced and not confused you? Are we on the same page? Okay. The law provides that you should always keep 10 naira in the final year your asset is put to use. By 25%, it shows that the asset is supposed to use 4 years. That's a simple implication. So the initial asset you carried was 1.7 million annual allowance. So it means the final year of that asset, this is the year one, year 2, right? Year 3. This is the 4th year, right? So the 4th year, the asset is not supposed to have 1.7 million annual allowance. It's 1.7 million minus 10 naira. That's supposed to be the annual allowance of the asset, because you must always keep 10 naira pending the asset is disposed. So to achieve that, what you do is 1.7 plus 1,110,000, then minus 10 naira. Now, don't make the mistake, it is not 10,000, it is 10 naira. That must be kept. Does it make sense? Does it make sense? Okay, good. Please, I want more response. If it makes sense to you. Yes, I'm not taking 2020 into account when counting the years, because it was 2020 that was now taken into consideration in 2021, right? So invariably, the 2020 was skipped totally. There's no basis period, and capital allowance is always computed on the premise of the basis period. Does it make sense? So if it is the basis period that determines your capital allowance, if capital allowance will be computed for that period. So in 2020, there was no basis period. So there's no justifiable reason to allocate allowance for that year, because there's no basis period. Don't forget, I told you that basis period is the basis for computing tax liability. So there's no basis. And if there's no tax, there's no need for allowance. All right. Benjamin, it's not me that you tell that one, though. But do you understand the gist here? Is it clear? No, invariably, you are not ignoring the 2020 asset. If you check, the 2020 asset was what determines your 2021 year of assessment. So what we are doing is just trying to push the 2020 asset to 2021. Does it make sense? So invariably, what you are doing is not ignoring the asset for 2020 year of assessment. What you are doing is trying to push the 2020 asset to 2021. So 2020 now becomes the 2021, because there's no basis period, so you are not looking to that year. That's the transition year from the old rule to the new rule. Yeah. Another question? So investment allowance does not form part of the tax setting value. The investment allowance does not form part of the tax setting value, and that's why we don't consider it in determining the tax setting value. But it's an allowance. That's why we add it to the part of the allowances. All right. Another question? Okay, if there are no questions, I think, can we move on? Okay, so the 10 naira, the idea of the 10 naira is that in the final year of the asset, after the useful life of the asset, if you are not disposing the asset, the law provides that you put 10 naira as the tax setting value. So the 10 naira must always reflect until you sell the asset, right? That's where the idea of 10 naira is coming. So the annual allowance is going to be reduced by 10 naira to form a basis that, okay, I'm still having an asset that when I want to dispose, I'll compare the 10 naira with the sales proceeds. Right. I hope that is fine. We good? So invariably, technically, it applies only to old assets. Kikelomo. It applies only to old assets. But of course, at the end of the day, the allowance of the old and new assets is going to be added together. That's why. So, but technically, it applies only on the old assets. Right. 2024. So again, it should be deducted from the tax value, but you know your tax value is derived from annual allowance. So anything affecting annual allowance invariably affects your tax value, right? So that way, if it's affecting an allowance, it's affecting your tax value. So the best and the fastest approach to it is just deduct it from the annual allowance and make it reflect. Automatically, it will reflect on the tax value that way. All right. I believe I've answered everybody. All right. Okay. I'm interested in this your thoughts, so that let me read it so that I won't miss it. Because the idea of this class is first to debunk your thoughts. If your thought is not in line with the tax standard or tax laws, they didn't want me to see your thought. Oh. Okay. I sure will come back to your question. Sorry. But can you see my screen? If you can see my screen, just tell me yes. Okay. Okay. Because we still have information for 2023, so we still have to continue. So I said before that beginning from September 2023, investment allowance is no longer applicable. If we still have information, we still have to use it. That's it. And we have information for 2023. That's why, I mean, we are still going to compute tax liability for 2023. Right. So what do you have here? So this furniture and fitting, so we can still pick the whole figure. So we can still pick the whole of 870 because it's supposed to use 5 years. For this guide to monitor vehicle, the first asset has reached the final year. So all you do for me is add the allowances together and minus it, minus 10 naira from it. Right. So I'm saying is 1.3 plus 1050 minus 10. So you have 2439. 2349. So what's the total amount, please? Help me, what's the total amount? My co-staff resigned though.
No, sir. It's 7739.98.
Huh? 7 what?
Sorry.
So you have 3.
9854.
Eh? What do you have? 9 Abby?
9854.98.
9854.
0.98.
So what's the amount? So toss it in on value. What's the amount? Please help me. Let's be fast so that we have just less than 15 minutes to the class. Spend the class. But don't worry, I will accommodate all your questions.
7650.
7650. Next one.
What? 16830.
I didn't get that.
16830.
Next one.
2220.01. 2220.01.
Next one.
870.
Hmm?
870.
Next one.
2100.01.
Next one.
0.01, not 0.001.
Okay. So I mean the annual allowance is just the allowance here. 9854.98. Abby. Right. Be sure that we've picked up the assets. Oh, wow. Okay. Hey, I just want to be sure. I want to be sure of something. Hold on.
That's finished.
Okay, so let's go. Let's now solve the question. So what were we asked to do? Computation of company income tax liability for 2019 to 2023 years of assessment. Abby?
I want to ask her. What I'm asking her, she wants you. I want to ask.
So you have 2019. You're going to collect it. So what do you have? What do you have as the basis period? 1/1/2019, right? 31st December 2019, right? Are we together? So you have adjusted profit. How much is the adjusted profit that we have in this question? How much is it, please? Am I alone?
No, sir.
Yeah, not alone.
How much is it? You have 16,250.
6,250.
Less loss relief. So how much is the loss that they had in this question? What's the total loss that they had in the pioneer period? I think we computed it some time ago. We computed it now. Okay, 23,070, Abby. Are we together?
Yes.
Again, you cannot give what you don't have, right? Are you with me?
Yes, sir.
So what's the unrelieved loss carried down?
Six, 820.
6020, Abby.
Yes.
20, Abby. Then your
Yes.
so here is nil, Abby. Then less capital allowances. How much is the capital allowances we computed for the first year? So you come to pick the first year's capital allowance. What do you have? 25,025, Abby. So unutilized capital allowance carried down. Because you cannot take up any capital allowance, right? So you have 25,025. So total profit will be what? Nil, abi? So CIT at 30% will be how much? Will be nil. Then TET, as at 2020 it was 2%, 2019 it was 2%. Say 2% of accessible profit. So what do you have? Plus 2% of 16250.
325.
325. So total tax liability. All right. So 2021. By the way, basis period is 1/1/2020, 31 December 2020. How much was our adjusted profit? It was provided in the question. How much is it? 18, Abby?
18,150.
150. Don't forget, we said that your capital allowance. I mean,
Sorry, 2,200. You know, adjusted profit of 2021.
what say?
You look at it, adjusted profit for 2021. 20, I think it's 2,200.
No, you pick on preceding year basis. So you pick 18,150. 2019, you
Okay.
pick actual year basis. 2020 is on preceding year basis. Does it make sense to you?
Okay, sir. Okay.
Yeah.
Yes, sir.
So yes. But you cannot relieve the losses again because the losses has lapsed. You can only relieve it in the first year of the post-pioneer period. Right? So let's capital allowance for the year. How much is the capital allowance? Just check our figure. You have 10,395, Abby. Then unutilized capital allowance carried down. Brought forward, sorry. How much is that? Total. Total. What do you have? What do you have as the total? What do you have as the total? Please help me. Just ṣàánú mi.
35,
35,
35,
420, Abby.
420.
Yeah. Capital allowance utilized. Again, you cannot take more than the capital allowance. But remember, we said it is restricted apart from so you have to check. But obviously, since it's pioneer, it's going to be manufacturing. But again, you want to check what is the nature of business to be sure, so that you don't it should be manufacturing or something like that. So a manufacturer of industrial alcohol. So capital allowance is not restricted for this guy. So you can take the whole of the adjusted profit. That's 18,150. 18,150. So unutilized capital allowance carried down. How much is that? Please help me. What do you have, please? My co-host have given up. Oh,
So please go back. I'm completing it. I can't see your screen.
17, 720, right?
Yeah,
Total,
27, 20.
eh, right. So again, CIT. But this time around, although it's still going to be zero, but you may want to pay attention to details and then check what is the revenue, because they gave us revenue 97,600. And at this point, they've started classification of companies, right? So 97,200 is below 100. Again, it doesn't have any effect, but you want to just display that you pay attention to details. So revenue below 100, but more than 25 is 20%. So CIT at 20% will be what? Nil, right? TET at this time it was still 2%. That's 2%. Please, can you hear me? Hello, can you hear me?
Yes, sir.
So I was saying that your revenue is less than 100 million, right? And remember the classification of companies. Companies with revenue less than 100 but greater than 25, it is 20%. Companies with revenue greater than 100, 30%. Companies with revenue less than 25 is 0%, right? So what's 2% of adjusted profit?
363.
360. So total tax 360. 2022 by way 1 okay. We have 1/1/2021, 31 December 2021. All right. So you have adjusted profit. How much is it? So I think I have 2,200, Abby. Less capital allowance for the year. How much is that? So again, you go to your computation and then confirm. What do you have? 19,383, right? Then unutilized capital allowance carried and brought forward. Beg your pardon. What do you have? How much is the brought forward amount?
17, 720.
17,720. So what do you have in total? So what do you have in total?
37,103.
03. Again, you cannot take more than you have. So capital allowance utilized is how much? 2,200. So you have 20. So you have unutilized capital allowance carried out. How much is that?
16902.
16903, Abby.
Yeah.
So you have a total profit. Then CIT, this time around, the profit is now how much? 101. So that's 30%. Milabi. Then TET at 2.5% this time. Versus single profit. How much do you have?
5005.
5
505.
505. Okay. So total tax will be what? All right. So 2023, which is the final year, Abi. So you have 1/1/2022 to 31 December 2022. How much is the adjusted profit? I think we were the one who computed this. 36615, Abi. All right. Yes. Capital allowance for the year. How much is that? 9854.9 9854.98 9854.98, right? Unutilized capital allowance carried down. What do you have? Melono.
16903.
16903. So what's the total that you have?
26757.98.
26,757.
7.98.
Yeah. Capital allowance utilized. So this time around, you will take the whole of the profit. You will take the whole of the capital allowance, right? Six, seven, seven, 9, 8. All right. The total profit. How much is that?
9857.02.
So what's the revenue size? You want to be sure. So that's turnover is 105, right? So I mean, so CIT 30%. What do you have? What do you have?
2957.106.
2957 point what?
106.
106, Abby.
Yes.
706.11. Then TET at 2.5. So yeah.
915.375. That's
You did it on
3
Abby.
8.
You did it on
915. 915.
yeah point
375.
915.375, Abby.
Yes, 375.
Okay, so Total tax liability. Three, 8, 7, 0,
0.49.
okay. Yeah, and that is the end of the question. You see, very simple. No thinking required. Yeah.
Okay, so
All
please,
right. So,
can we ask questions now?
what do you say?
I think can we ask questions now?
Yes, yes, yes. Please go ahead.
Okay. Please, when capital allowance is restricted, I would like, I would be taking the whole adjusted profit. What are we going to do?
So you mean when it's restricted to two-third, Abby?
Yes.
Yes, it's by the adjusted profit.
So just take 2/3 of the adjusted profit.
Yes, yes, yes. Because that's the accessible profit.
Okay.
Okay.
Because
So let
somebody
me welcome
in
you.
the chat is saying the
Yeah,
capital allowance is wrong. I don't know.
which of the capital allowance is wrong?
That's from 2021.
Abba, Abba, Abba. What makes it wrong? Okay. So don't relieve loss should be forfeited. Don't relieve loss should be forfeited. Right. So yeah, where is the wrong capital allowance now? That one even weak me, sir. Or is it that I picked the wrong figure? Is that what you're saying? Okay, let me speak now. Sorry, I'm almost done. Ah, so 2020 TET 2.5% became applicable in 2020 year of assessment, not 2021. Okay, let me allow you speak. So let me allow everybody speak. Let's hope will be as fine as it should be. But I'm doing overtime now. Okay, so please raise your hand. So Judith, your question. Judith.
Okay, hello, sir. I think my question has been answered. Thank you, sir. Sorry, let me drop my hand.
Okay. Yeah. Emmanuel. Emmanuel. Kemi. Kemi. Okay. Afolabi.
Sorry, sir.
Afolabi.
Please, sir, my question is, sir, can you hear me?
Yeah, I can hear you. Please go ahead.
Hello? Okay, sir, please, I
Yes.
wanted to share more light on the basis period, please.
The basis period from, are you talking about why we did, I mean, light as in, because everywhere just dark now. I don't know where you want the light like now.
Okay, I want light from the the accessible period from what year to what year. I
So
think I'm confused about.
you mean why are we doing 2019? I think that's the question.
No, I want to know like the number of basis period. Yes. Why are we not doing
The number.
2020?
Okay. So 2019 was under the old rule. So you apply the old rule there. 2020 rule. So you apply the new rule in 2020. That's why there's no basis period in 2020. But the new rule is saying you should do it on preceding year basis. And if you do it on preceding year basis, you have to repeat 2019 in 2020. And the rule is saying there should be no repetition of any kind. There should be no gap of any kind. So that's why we didn't have to do it that way. Question. All right.
Okay, thank you, sir.
You're welcome. I mean that.
Okay, sir.
Okay.
Sir. So
Go
please
ahead.
can you go back to the question? Yeah, that CIT and or the computation of CIT.
Okay.
Yes, I'm not there. Can you
Person saying
scroll down?
capital is wrong. Yeah, I'm scrolling now.
Yeah. Uh,
You mean the question or solution? Which one do you want to see?
on the solution, like the solution when calculating the carry for the capital allowance.
Oh, okay, okay.
Okay. So 2020, can you scroll?
So which year?
2021.
Okay.
So that unutilized capital allowance, it is not 17,720. It is 17,270.
Okay.
So from there we are getting the wrong listing
Okay.
and we keep
Wow. Subhanallah. Okay, so what do you have now? What's the new figure here? It's going to affect a lot of things. So.
yeah. We've been saying on the comment section, but
Please help me.
okay.
Let's be fast now. Let's be
19,
fast.
8, 3, 17, 270. 3, 6, 6, 5, 3, 6, 36.
Yeah,
36, not 30.
36. What?
Mm-hmm.
Okay.
6, 653.
Okay.
Yes.
So the 6. So the utilized will change then. So you should have
Yes.
something around 16, Abby.
Yes. Minus
16 what?
453. 453.
453.
453. Okay.
Yes.
So here it has changed to 453. So what do
Yes.
you have here as the
Plus
capital allowance?
26.
26307.98.
307. So here should be 307.
That's one with
307. So what's the total profit now?
10,307.02. Yeah.
yes,
10,000.
307.02.
307. So what's the TET now? I mean the CIT, beg your pardon.
3092.11.
3092. Alright, 2.11. What's the total tax liability now?
One 5.3 4007.49.
400.
7 point.
All right, all right. So that's fine. Thank you
Yes.
very much. I appreciate.
Yo.
Uh, So yeah. Benjamin, Afalabi has answered, right? So Benjamin is the next.
Okay, sir. Thank you very much. Please, can you go back to the question under additional information, please?
Okay.
I think
Sorry.
the last one that has to do with disposal.
Yes, I think I incorporated that in the question. Okay.
Okay, I just want to reconfirm if we use the 100K loss on disposal, or it's going to be ignored.
No, 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 no. So the whole thing was done the whole thing was done during the pioneer period. So you don't need to determine whether it is balancing charge or balancing allowance. Do you get?
Okay.
The
Yeah.
whole adjustment was during the pioneer period. If it were to be post pioneer period, now you have to do balancing adjustment. But in this case, it is in the balance in the pioneer period. So they are on holiday, so there's no need to determine whether there is loss or stuff like that on the disposal.
Okay, but I thought you
Right.
said losses are carried forward, but profits are
So
ignored.
again, on assets, what you have is loss. What you have is balancing allowance, not loss on disposal. So the accounting guy was the one who determined the loss on disposal, and we cannot rely on him. So ideally, what we are supposed to do is to compute a balancing allowance, a balancing adjustment, which will tell us is it truly a loss or a profit. But because it is during the pioneer period, there's no need for us to do the computation again. Does it make sense now? When I say loss, I mean I'm not talking about the accounting loss. Remember, for us to even take the loss into account, right? Remember what we had to do? We had to recompute the adjusted profit because we don't typically believe on what the accountant has computed. Or the only service to reconcile it to get our own at the end of the day. Does it make sense to you?
Yeah, but what year was that asset disposed?
It was disposed, I think, in let me be sure. It was disposed in 2018, and the pioneer period ended in 2019. So it's still within the pioneer period.
Okay. Okay. Okay, I was thinking
Yeah.
it was disposed around 2023 when we adjusted that
No,
profit.
no,
So
no,
that
no,
was why I was thinking, why wasn't it incorporated?
no, no, no. It was
Okay,
2018.
so my next question is, at what point should we separate the old and the new annual allowance if there's additional assets? I discovered at
So the
some
idea,
point you incorporated everything together, even when both assets were purchased at different dates. I don't know. And
so
and
the point
sometimes
is,
you splitted them.
so it depends on you, really. If you feel you can incorporate two of them together, and you will be fine. The reason for separating it, I typically would separate it in the first year the new asset is purchased. So it will give me a sense of both the old and the new. And subsequently, you see me adding everything together and then move on. In fact, you see some people incorporate everything together once, even at the time the asset was purchased. So it's just a function of you being sure that you won't mix up the numbers, right? That's just the idea behind it.
So it doesn't matter if the assets are purchased at different year.
So it really does not matter,
Hello,
but
sir.
make sure that if yeah, so make sure that you are so vigilant in counting the years so that you can always recognize the 10 era at the end of the day.
Okay, all
Does it
right.
make sense? Yeah.
Yes, sir.
Yeah. Ibrahim.
Hello, sir.
Yes, sir.
Okay, good morning, sir.
Good morning, sir.
Yes, my confusion is on the loss relief, relief that was the loss that was
Yeah.
forfeited. Is there a specific provision why that remaining loss was forfeited? got it. I've seen some answers where the
So,
loss was carried for indefinite and it was completely relieved. So let's go for
yeah,
picking the remaining ones
but
this time.
for pioneer companies, losses are forfeited in the first year. For all other companies, losses are carried forward indefinitely. But for pioneer companies, we can only give them that advantage of loss relief for the first year in the post-pioneer period. But specifically for pioneer companies, all companies
Okay,
that are under the
so pioneer companies
yes,
can only release loss in the first year. The losses they are bringing over from the pioneer period can only be relieved in the first year.
exactly,
Any other thing that was not relieved will be forfeited.
exactly. Because ideally the profit is ignored. You didn't pay tax, so why should you take all the profit self? Let's share it now. Do you get?
Okay.
Yeah. So that's just the idea behind it.
And
Make sense?
sorry, secondly, if a company during the pioneer period, if a company made profit of say 10,000 in the first year and say 15,000 in the second year and 12,500 in the third year loss, will the earlier profit used to relieve the loss in the final year
Yes.
of the period?
That's the idea. That's the idea. So
Okay.
it is the net loss that is carried forward from the pioneer period. Accumulated
Okay.
profit in the
Net
pioneer
loss or
period is
profit.
ignored. Net loss. No, profit is always ignored.
Okay. Okay.
So if it is a
So,
profit is carried away from the pioneer period, you just ignore it and move on with your life.
okay.
It's not taxable, right?
It's all right.
But
Thank you.
if it is loss, that's where you now check the net loss. So if you make profit during
And
the
relieve
pioneer
it for
period,
the fourth year.
yeah, exactly, and then come bring the loss and the first year. But profit is always ignored.
It's all right. All
All
right.
right,
Thank you.
you're welcome. Next person, Angela.
Good morning, sir. Thank you very much for the opportunity and thank you for your labors. Please, my own question is related to Note 10.
Note 10. Okay.
Yes, sir, I'm
Okay.
going back there. I am not clear. I feel that the detail or the information provided there shouldn't come into our computation because they said the furniture that cost 600,000 were disposed of for 100,000 on January 1st, 2018, and the entire proceeds received were applied to the acquisition of new set of furniture and fittings on January 13, 2019. And that figure
Yeah,
that
okay.
was used to purchase the furniture and fittings in 2019 is given in note 9. So I am assuming
Okay.
that, or my understanding is that that amount is already captured in that 4,000 or 4 million rather. So why do we need to do all those
Exactly.
adjustments like we did?
Okay. Actually, I like your question. And on a lighter note, you speak like somebody from a law background. Right. So just wanted to note that. So now uh let's look at it together. So you purchased an asset on January 13, 4 million, right? So 4 million naira is their constant. They've applied the 600 naira or the sales process in the 4 million naira. So invariably it means that if we do not adjust the initial asset, which was purchased in 2016, we've double counted. Does that make sense?
Yes, I'm with you.
Angela,
I'm listening.
so I'm that. So you sold something in 20, you bought something in 2016, you sold it in 2019, right? To purchase another one in 2019. So what means is that if we are going to take cognizance of the asset, we must off so that we don't double count the amount because that amount is embedded in both 2019 and 2016.
Okay,
Right?
sir.
So the best way to net it off from what you have in 2016 and then make it incorporate since it has already been incorporated in 2019. That way we don't double count, so we don't exaggerate your allowances.
Okay, sir.
Does it make sense?
Yes, thank you for the explanation.
Does it make sense?
Yes, it does. Thank you.
Yeah, you're welcome. All right, Amadi.
Okay,
You
thank
say.
you very much, sir. Thank you very much, sir. My question is, um, there was no basis period for 2020 year of assessment.
Yeah.
However, we went ahead to calculate capital allowance for 2020 and also CIT for 2020 on preceding year basis. But you also mentioned that
Let's be clear.
hello.
See, you notice from 2019 I jumped to 2021 year of assessment.
Yes, during the basis period, but we computed capital allowance for 2020 and CIT for 2020 on preceding year basis. So, but you also said that there should be no repetition based on the law or something. So, would you like to throw more light to it?
Hello? Hello? Sorry, Amadi, I lost
Hello, we can hear you.
I lost collection at that point. Sorry. So I was saying that I didn't get your question clearly. Can you please come again?
Okay. My question is that there was no basis period for 2020 year of assessment. However, we went ahead to calculate capital allowance for 2020 and CIT for 2020 on preceding year basis.
So
But you also mentioned that
making it 2021 year of assessment. Do you get?
with which basis period?
So 2020 period forms the basis for 2021 year of assessment. Right? Does it make sense?
Okay.
Hello, Amadi, can you hear me?
Yeah, can you clarify? I didn't get that.
So I'm saying that we don't have year of assessment. We don't have basis period in 2020. Right?
Yes.
So we don't have basis period in 2020 year of assessment. Does not mean 2020 does not exist.
Okay.
There's a date called 2020, January to December 2020. But following the law, 2020 will not exist because 2020 is supposed to come for 2019. Right? But in 2021, we will not apply the 2020 because there's still a date called 2020. That's why we did it that way. Does it answer your question?
Yes, please. Thank you.
Yeah. So let's continue. Emmanuel Silas. Emmanuel Silas. Okay, okay, you want to go ahead? Emmanuel Silas. Okay, it's not there. I didn't care.
Yeah, hello. Can I see the computation for the capital allowance? Because looking at it, the annual allowance for 2023, I can see that we didn't take the numbers of motor vehicles into consideration. Because when we take the number of motor vehicle into consideration at the last annual allowance for 2023, our annual allowance should be 2349.98 because we are having two vehicles. Not one.
Okay.
Are you with me?
Yeah, I'm too sorry. So I'll
Yeah.
check. I'll check. It must have been a mix-up from my end, but I would admit. But let's check. Let's check together.
So motor vehicle, we have two, not one. So the annual allowance should, the 10 naira times 2 should be 10 naira times 2.
Okay, that's true. Motor vehicle 2.
Yes.
That's true.
So our retention fee or
Yeah.
retention amount should be 20 naira on those two assets. All right.
Because the fact that not there's very material difference.
So you can see that the figure is not 9, it shouldn't be 0.99, it should be 98. So your tax within that value should be 0.01. Like what? Yeah, it's correct now. Yes, it's correct. So yes, it's correct. Okay.
Okay. Okay. It's still the same. Yeah, it's still the same. No problem. Thank you. Thank you, Ibrahim Ahmed.
Yeah, thank you very much, sir. Hello, can you hear me?
I can hear you. Please go ahead.
So, my first question is this: for the 600, assuming he's not a pioneer, we'll have probably deduct annual allowance and initial allowance.
Yes.
Are we still going to apply the same treatment?
No. So in that case, you are going to determine the balancing adjustment on the asset. Right.
Okay, so
and then
you just
value.
deduct retaining value, then you do the sales proceed to get if it's balancing allowance or balancing charge, right?
Yes. So you now deduct the tax down value from the pool of assets that you have, not the cost. The tax down value is what you deduct from the table.
Okay. Then secondly, preliminary expense. I'm assuming it's because there's a written off in front of it. That is why we are.
No. Preliminary expenses is typically disallowed.
Oh, okay. But sorry, please, what's the difference between miscellaneous expenses and preliminary expenses? Because I know
preliminary expenses are expenses that are pre-incorporation related. So expenses you incur before you start business. Right. Miscellaneous are just expenses that you incur. Miscellaneous is another thing like for general expenses. Do you understand? So, so the idea is that preliminary expenses should have been capitalized because they were the expenses are no miscellaneous expenses. If there's no additional information, miscellaneous expenses is allowed though, because it's general expenses. But preliminary expenses is disallowed because you will realize that the expenses that are incurred before the company start operation fully.
So I said the idea of this 2020 year of assessment. So we're just going to charge the CIT and a loan, right? Sorry, the tertiary education tax alone.
Yeah, because there's no profit, you can't subject what zero to tax, right? There has to be tax.
We calculate for capital allowance, so it's just the one that we brought forward from 2019 that we're going to deduct, right?
You mean for 2020 year of assessment?
Yes, for 2020 year of assessment. That's what I.
No, we don't have 2020 year of assessment at all because there's no basis period. And the basis period is what determines whether or not an entity will be assessed to tax.
But there's a profit for it.
So that profit will be assessed to tax in 2021 year of assessment.
Okay. Thank you.
Because 2020 is accounting year.
No.
Right? And you don't follow accounting year, you follow your year of assessment, your assessment year.
Okay. Thank you.
You're welcome. Right. So, Basira.
Well done, sir.
Thank
Thank
you.
you for your time. So my question, please, why is reacquisition of office lease disallowed?
First, anything that has to do with lease, if it is short term is allowed, long term is disallowed, long lease. But this, when the examiner is silent, you will assume that the lease is a long term
Lease.
stuff. Yeah, it's a long lease. And the word acquisition is even looking more like a capital stuff.
Capital is capital in nature. Okay.
Yeah, the word acquisition is looking like a capital. So
Okay.
those two it's allowed.
The customized promotional gift to customer. What's the argument behind that?
So we need you to give gifts to the customers to induce them to come again. So it's reasonable enough. But if you had told me it's your staff members you are giving gift, is disallowed. But gift to customers. What do you say?
Can gift to staff not be under like say allowance or something or?
Yeah, so it should have been incorporated in your personal expenses now. That should be based on what you agree.
Okay, not what you bring separately. It should just be included in personnel account.
Yeah, so it should form part of their salaries and wages.
Yeah, okay.
So if it is not part of it now, then there is a problem.
Another thing for the QCs, some are gotten in 2020, 2015, 2016. The year varies, but I saw that you added them all up.
Yeah, it doesn't matter when you got the assets, provided it's under Pioneer, right? So any asset you get during the Pioneer period will be assumed that you purchase it in the post-Pioneer period.
Post-Pioneer, okay.
So that's when we'll claim the allowances for them because you're on holiday.
Because I know we disregarded them, the profits or this thing from Pioneer period, but for asset, we deem it that it is post-Pioneer that we got them, right?
Exactly, that's the assumption there.
Then the furniture and fitting here, do we put into consideration the 20 that was mentioned?
The 20 as in, I didn't get that.
Furniture and fitting, just like motor vehicle says 2 in front of it. For furniture and fitting, it's saying 20.
Yeah,
I guess 20
correct.
pieces of furniture
and fitting. But the reason why we didn't incorporate that is because furniture and fitting is supposed to use 5 years.
Okay.
Right. And we only did for 4 years. So assuming we are going to get to the 5th year.
To the 5th year, then we would have
then 10 times 20 to get the taxable value.
Okay.
Yeah.
Then I think they've asked more questions regarding this question 10, that the cost 600 and 100. The adjustment you did was around what? You deducted 4,000 minus the 600 or something.
No. So I did 600 minus what's the figure now? 600 minus what? No, minus 24. Again, it is in the Pioneer period.
Okay.
So the idea is they've not claimed any allowance. So there's no need for us to make any adjustment. So what happened is that 24 was reducing by 600. Right.
Okay, to make 16.
Yeah, to make 24, yeah, to make 16, yeah.
Okay. I don't know. So is that 16 that we now did capital allowance for?
Exactly, because the 600 is no longer theirs.
But the 24 precedes the year that the 600 occurs.
Correct. But don't forget that even the 24 does not qualify for allowance until 2019.
Right.
So, and what we're looking at here is the allowance, not the asset itself. That's why we said it is when the asset is going to qualify for allowance. Assuming the allowance is assuming they disposed it after the asset has qualified for allowance, they will now consider what is the taxable value of the asset. But again, this asset has not qualified for allowance this time. right?
Yeah. Yeah.
Yeah, so that's it.
Okay. Thank you, greatness.
You're welcome.
That's all.
Yeah. Olashade.
Yes, thank you. Good morning. Thank you for everything. Please, I think I lost communication at some point in time. This note 11 is irrelevant, right? Or do we use at any point? Dividend declared.
Okay, so now what the idea of dividend declared is that any dividend you declare in the pioneer period, right? Declared in the pioneer period out of profit, right? If you declare it again out of profit, you will not pay withholding tax on it. So that's why they remember in note D they said that the provision of note C, question C, comment the tax provision of gross dividend declared for 2018 and 2021. That's what the examiner wants you to mention there. That for assets purchased for the dividend declared in 2021, so the asset does not qualify for. The dividend does not qualify for withholding tax. So that way there will be no withholding tax on the dividend declared. Why for the one on the one that are you with me?
Yes, I'm very much with you. The one of 2018, that's the pioneer period.
Yes. For the second one, for the 2021 one, is in the post-colonial period, right? So it qualifies for withholding tax. Notwithstanding, you still have to check that because a company can be assessed to tax on dividend basis, right? A company will be assessed to tax on dividend basis. By dividend basis, I mean that if you declare dividend in any year of assessment, and your profit is lower than the dividend, right? That was what somebody was asking on Thursday. I think Hassan or something. I'm not sure I got the name correctly, but somebody was asking that on Thursday. So if you declare dividend in a year of assessment, right, and dividend you declare is lower than the total profit, then you'll be assessed to tax based on the dividend. So this is what I'm saying in practice. This is what I'm saying now. So in 2021 was where it declared 2160, right? So in 2021, what year is that 2021 now? So that's 2022 year of assessment, right? Are you with me? Are you with me? Am I
I'm very
alone?
much with you.
So
I'm
I
with
would say
you.
dividend basis. It didn't have a profit here. So I would say tax based on dividend. So I would say 30%. Is it 30%? Yeah, 30% times or of 2120. So what do you have?
It's
What?
not so. It's not so 120. It's 2160.
2160. So what do you have?
Hello, sir. Is it 30% or 3%?
30%. 30%.
648, sir.
Okay, 648. So is this 648 now that you compare with this zero? So whichever is higher will form the tax liability. So in this 2022 year of assessment, the company income tax will be at 648. Right. Those are the two things you have to note in that your discussion when you are discussing about that subject with the exam. So that's what the examiner is willing to see in that stuff, right? So again, for 2018, there's no withholding tax. For 2021, there will be withholding tax because it's now on tax holiday. The tax holiday is over, and also when the dividend declared is above the total profit in the year of assessment, dividend declared will form the basis for tax liability. All right. I've answered your question, Folashade.
Thank you very much. Thank you.
Yeah, you're welcome. So that let's move on. Adebola. Okay.
Thank you, teacher. God bless you and all yours in Jesus' name.
Amen.
Yeah, I just want to make a clarification on what someone asked concerning the pioneer period, concerning the profits. I couldn't get your explanation. Like if the first 2 years, the person has, say, like cumulative profit of 20,000, and in the third year, the person is having 6,000 naira loss. Will you net off the loss from the 20,000 naira cumulatively, or you will carry forward the loss to
So
the
you will net off. You will net off. So in that case, there's no loss to be carried forward to the post-pioneer period.
It's all right. Thank you. God bless you.
You're welcome. All right. You will net it off, right? The Aisha.
Yeah, thank you very much, sir. Yeah, I need clarification as we get give to customers, because like you said, gifts to customers are allowable expenses since they are given to customers to promote our business. But there's a question I saw. I think that's Highland May 2023. It was disallowed. So I don't know. There are sometimes that it will be allowed and disallowed. So in what case are we going to know
Okay.
that okay,
So
gifts to customers are allowed or disallowed?
Okay. Yeah, I think if it is going to be disallowed, it's on the ground that the reason for disallowing it does not make sense. So if you are giving it as Christmas gifts or Molid gift or things like that, then it may not qualify. Or it's sounding more like an entertainment. Right.
Okay.
But
Yeah.
but if it is promotional, again, you have to promote your business. So what the gift for customers on a normal ground should be allowed, but what forms the basis for that gift becomes the next question you want to ask. Is it a Christmas gift? I mean, you are not a Santa Claus, so that's it.
All right. Thank you, sir.
You're welcome. So I believe I've attempted. I've answered everybody. Yeah, Kende.
Sorry, like you said, if the gift is just a customer gift, like if it is for promotional service to customer, like the Christmas gift, will it be allowed?
So Christmas is no longer promotional now. You are doing Santa Claus. Promotional simply means you are trying to induce them to buy. Right? So that's what promotional is saying. We are trying to induce them to buy. Right? But I mean, Christmas gifts, New Year gift, and all of those things, they sound too mundane. All right, that's just the idea. Restriction on capital allowance is two-third, but again, it's not restricted for it's not restricted for what's the name of this guy? Agriculture and agro-allied. You don't restrict for agriculture and agro-allied. And this question is for agro-allied. No, it's for manufacturing. That's why we didn't bother restricting it. For manufacturing, that's why we didn't bother restricting it. Esther.
Thank you, sir. Mr. Mike, I don't have a question, but just to appreciate your family for allowing us still into their time. You should be bonding with them, but they allowed you. So God bless you and bless my little baby too. Thank you, sir.
Oh boy, thank you very much. Thank you very much. And thank you for not minding my little baby actually. All right, thank you very much. I appreciate it. This means honestly that statement means a lot to me, to be honest. Thank you very much. God bless you too. All right.
By regards to that baby boy, he's a fantastic boy. He's learning
Thank you
taxation very fast.
Thank you very, very much. Thank you very much. He's saying hello too.
Thank you, sir. Thank you, sir, for your patience of always explaining over and over again.
Thank you.
God bless you, sir.
You're welcome.
God bless you, sir.
Amen. Amen. Amen.
Hello, sir.
Yeah.
Sorry for cutting in the thankfulness. I'm also grateful.
No problem. No problem.
But I still have a question. I was
Yeah,
hoping
please
you'd
go
give
ahead.
a brief discussion about restriction, like just
So,
the summary of what it means and how to apply it.
On capital allowance, right? So the capital allowance is restricted to third for every business. Every business to third. Always note that for all businesses, we always restrict it to third of accessible profit. But then for manufacturing and agricultural companies, we don't restrict. So if you see a manufacturing company, you don't bother restricting. But if they tell you it's a trading company, you restrict. If they tell you it's a distribution company, you restrict. Right? And you always restrict to third of accessible profit.
Okay, is that restriction I'm confused about? How do you solve it? You said to third of the
Accessible profit. So I will look for a question in my next class. Obviously, I will say that will make me illustrate it better. You know, these things are better illustrated with numbers. So I'll look for a question that will incorporate that and then we'll solve it in the next class. And my next class with you is tomorrow, 8 p.m. Sunday, 8 p.m.
All right, so thank you.
Yeah.
Hello, sir. Hello,
Yes.
sir. Yeah, thank you very much, sir.
You're welcome.
Yeah, and thanks to the young lecturer. We are very grateful.
Sorry for the
Please,
disturbance.
no problem, no problem. You're welcome.
Thank you.
Please,
God
hope
bless
we are
you,
going
sir.
to
We
get,
really
we are still going
appreciate
to
the
get
voice
the
of your
recorded
baby
version of
guy
this.
for coming up at the background.
Hello.
Yeah.
I said, hope we are still going to get the recorded.
Yeah, definitely. You're going to get the recorded
Yes,
version.
please.
Yeah.
Very, very important.
Just
Really.
after say 10-15 minutes, just log into that your file that we shared with you.
All right.
Yeah, you will get it.
Thank you, sir. Regards to the youngest ACA.
Thank you very much. Thank you very